session of a 3 days workshop on bank branch audit. Can I request our chairperson, CA BIS, Bangalore branch, to escort CA Anil Kumar sir, chief guest for the day, onto the dais and welcome him with floral bouquet. And also, I request her to escort today's speaker, CA R Sundararajan sir also. Thank you, sir. Thank you, ma'am. Can I request the BIS chairperson to welcome us?
Dignitaries on the dais, Shri CA Anil Kumar, chief guest of today's program, who was also past chairman of Bangalore branch. CA R Sundararajan, speaker of today's program, who is also an author, qualified information systems auditor from ICA, also specialized in audit and assurance practice. My colleagues in managing committee, esteemed professionals. A very pleasant afternoon to each one of you present here and hearty welcome for 3 days workshop on bank branch audit. We recently had whole day seminar. Last Saturday we had, where more than 260-270 professionals have attended. But in the view of various problems being faced in the bank branch audit, and also as per to benefit who are now attending bank branch audits, so we have organized 3 days workshop. Also in the view of CAs as auditors of bank, who have a major role to play in compliance and also in safeguarding the interest of stakeholders and customers, we are as a tradition organizing bank branch audit seminars and workshop year on year in the Bangalore branch. So I request all of you to kindly participate with lots of your questions. Also will be clarified in 3 days workshop. So let it be more interactive and happy learning to each one of you. Thank you.
Thank you, ma'am. I have a proud privilege in introducing today's chief guest, CA Anil Kumar sir. Anil Kumar sir was in Bangalore branch managing committee when I was doing my articleship. CA Anil Kumar is a BSc graduate, is a fellow member of CA Institute, and he is also a certified information systems auditor. He has done his articleship in KP Rao and Co. During 1979 to 1982. Qualified in the year 1983. He specializes in audit, taxation and company law as partner of Rao and Swamy Chartered Accountants. And he has associated with activities of Bangalore branch since 1988. In the term 1988 to 91, he was the managing member of managing committee. He was CICASA chairman and also secretary in the year 1990-91. In that year, Bangalore branch was adjudged as the best branch of ICI for the first time. In the term 1998 to 2001, he again became managing committee member and then became vice chairman in the year 1998 and 99. And during 99-2000, he became chairman. In this year, Golden Jubilee of ICI was celebrated. A 2-day conference was celebrated to mark the occasion with parallel sessions. Funds was raised from the conference went to improve the infrastructure of this branch. He is associated with coaching classes till 2004, and then he has presented various papers on audit, especially in particular to bank audit, taxation and company law at ICI programs. With this brief introduction, I present before you CA Anil Kumar sir. introduce today's speaker for the day also. CA R Sundararajan is a fellow member of Chartered Accountancy. He is a DSA from ICA. He is managing partner of Messrs. SRBR and Associates. He is a qualified information systems auditor. He specializes in the area of audit and assurance practice. Has been addressing almost all the branches of SISF ICAI on topics of bank audit and assurance standards, accounting standards, tax audit, corporate audit, due diligence review, code of ethics, etc. He is visiting faculty in Institute of Cost Accountants and Company Secretaries along with CA Institute, CAG and Staff Training College of RBI, Indian Bank and Indian Overseas Bank. He has co-authored a book on bank branch audit released by CASC, Chennai. He has been co-opted to various committees of ICAI Delhi and SIRC on corporate laws, members in industry, CPE, etc. He has held positions of Treasurer, Secretary, Vice Chairman and Chairman of International Fiscal Association, Southern Region Chapter. He has been actively involved in Lionism and a regular blood donor and also a consistent contributor to social needs of the society. With this brief introduction, I present before you CA R Sundararajan sir. Thank you, sir. Let us invoke the blessings of Almighty by lighting the lamp. Can I request dignitaries on the dais to do the honors? I request all the members to rise for
Sukteshu jagrati Yaesha sukteshu jagrati Tamam 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 sho nirvimana Tadeva shukram tad brahma Tadeva Mritamujjate Tasmin lokaha Sarvetaduna Tyalitaschana Vyamitaschan Etat Vaita Etat Vaita Etat Vaita Etat Vaita Etat Vaita Etat Vaita
Thank you, dignitaries. Thank you, members. Can I request CAH Anil Kumar sir, today's chief guest, to do inaugural address.
A warm good afternoon to all of you. When I look at the seats over here, I remember that what goes around comes back. Because I'm one fellow who generally avoids all inaugural sessions and just coming and this thing. I would like to go straight to the main course. No soup for me. so yes, it's nice to see that a lot of young faces are there who are interested in bank audit, and of course some seniors also, because bank audit is like the proverbial elephant. How much ever you approach it, from whatever side you approach it, you can never go back and say that you are confident that I know bank audit. So every year you have to, or every time you get an assignment, you have to again see, get abreast, get this and get refreshed, get to the what should I say, come up to date. I'm also happy that the Bangalore branch remembers the what should I say, the infrastructure which happened in the Golden Jubilee year. That was the electricity and the water supply. Till then it was temporary electricity, temporary water supply. So I keep, and I don't know whether anybody remembers Jensen and Nicholson advertisement. Every time you see color, think of us. So here, every time you pull the flush, think of me. so till then it was, there was a big problem because we had to get the connection from outside and into the thing, and everybody was waiting for, you have to dig the trench up to the premises. So the neighboring fellows took the connection, then from their point to our point was a bit simpler. So everybody was looking at the other person, trying to be the first person. So that went on for nearly 10 years till we bit the bullet. We did a program, the Golden Jubilee Conference. We collected the money. That money was used for this particular project. And that was the first time. That was the first time. Suddenly, everybody realized from ICA program you can make money. Till then, nobody realized that. After that, people are making 10 times what we made in the Golden Jubilee Conference by doing all sorts of programs. There were no CPEs then, so attendance was voluntary. Now, of course, it is ransom. So you come, you get the CPE credit. So I understood that 70 people are registered, but of course, as per the structured learning program, as long as you are registered, you get your CPE. Anyway. Huh? Okay, okay, so there is some internal control over here. Then, today, coincidentally, there was a song, Lai Lappa, Lai Raklo. So, does anybody know the last closing lines of that particular song? Anybody? Have they heard the closing lines? So in that it is an office, what should I say, exchange between the ladies and the gentlemen. So the ladies say the gentlemen are useless, gentlemen say the ladies are useless. And the last closing line is, at a certain point of time you see the ladies and the gentlemen, wo kursi pe hum but jayenge. So we saw Geeta before us sitting in the same chair, and I am happy to see Divya also in the same chair, which we all occupied earlier. So all success. And moving on, we all hope to see both Geeta and you, in the upper echelons of the institute. So the question which comes is, what distinguishes an audit from any other function? So earlier we used to say we are audited and closed our closed our audited financial statements, and there were 4 clauses over there in the audit report, whether the balance sheet was an agreement to the books, whether all the laws were in compliance. The last thing, whether the accounts presented to it fair view. We have moved a lot from there to today. So today's format of the audit report virtually tells you what is the audit and what you have done. 50 years back, or when the institute was founded, 2 people could have said, yes, we have done the audit, and both of them, and there could be a big argument between them, why you did this, that was not required, that was too much. Other person could say, no, no, that is required, you have to do if you have to give a true and fair view. But today, there is a structure. So there is a structure which will, and it is conveyed through the audit report. So please look at the audit report first to understand what you are holding out to the reader of the financial statements. We have audited. So you open this thing and what is the top line of the audit report? The first thing the reader of the audit report sees, what does he see? Anybody?
Whether the report is qualified.
The first thing, what does he see on the top of the audit report? Independent audit report. So that is a hallmark of the auditor, of audit, that our word carries weight when we are independent. Our word doesn't carry weight when we are seen not to be independent. So on the top we proclaim that we are independent. So when the independent auditor gets a letter of appointment as the statutory branch auditor, what is the first thing he will see? What is the first thing he will see?
How big is the branch?
Huh?
How big is the branch?
No. I mean, is he a statutory branch auditor? So, which part of the statute, under which part of the statute is he appointed? What are his obligations? What are his powers? Then he can, work out further and go further. So, an exercise for all of you. In the case of public sector banks, they have been nationalized by two acts. One was the Nationalization Act of 1970. The second is the Nationalization Act of 1980. So, if you want to hold yourself up as a statutory branch auditor, you find out under which clause of this act you have been appointed. If you are not able to find anything, no problem. You are following the footsteps of your Purvaj for 50 years of, what should I say, the precedence is there before you. Accept the appointment. Next is, see what is the branch, what is the advance of the branch, how much fees are going to get. Okay. The second quality of independence is that you have the same powers as the statutory auditor. As a branch auditor, you have the same powers as a statutory auditor to call for information and to get the information from the branch. So you are not obligated to get the information from the books. It's an independent assignment. The responsibility of furnishing the books and furnishing the accounts is on the branch or the bank. The third category of independence is you are given in the appointment letter, yes, you have to do the various clauses, things, and you have been given a time schedule. So question is, you have to decide whether you can do it within the time schedule or whether you require further time. If you require further time and you feel you require further time, immediately communicate to the statutory central auditor that you require further time to do the work. Now, everybody is working under a time schedule and they will reply to you, no, it's not possible, but at least have that communication as part of your work papers. So tomorrow if there is any problem, you have on record that the audit was done in a hurried manner. You are not given the time to complete the. One of the first questions which we as branch auditors ask a central statutory auditor is, you have asked us to finish the work within X number of days. Can you give us a model audit program? to complete it within the time. So that communication goes on day 1 and no reply will come from central auditor. Okay, don't worry, don't expect a reply from the central auditor, but it is there as part of your work papers that you have asked for it, and somewhere bring it out in your audit report that you have called for it, not you have done the best of your ability. In fact, in our audit report, we said the time schedule has got no meaning. At whatever time the branch asked us to stop, we have stopped. That's all, period. And we issued a report based on the findings up to this particular date. Okay, so nothing else further is done. So whatever we have found up to the date, we have given. So, again coming back to audit. The difference between audit and a review. Can anybody say? What's the difference between an audit and a review? What is a review? What is an audit? What does the standard say? See, people who have qualified before 1990 are exempted because they never had the auditing standards paper as part of their exam. Those that qualified after 1990, they had auditing standards and inspection. And those who have qualified after 2008, when the particular project was there, the Clarity project, where all the old standards were brought in line with the international standards, there were absolutely no excuse at all. So who have passed after 2008? Yes. So what's the difference between an audit and a review engagement? So audit is supposed to be a reasonable assurance engagement. Review is supposed to be a limited assurance engagement. So what is reasonable assurance? What is limited assurance? So suppose somebody comes and I get a proposal for one of my children. So I call somebody and say, hey, take a look at the boy or the girl and let me know if how the person is. So they will just go take a look. Okay, the family is good, everything appears to be good, effort talks nicely, etc. So they'll come back and say, hey, we have found nothing, it's apparently okay, and we have found nothing wrong with him. So it's a limited assurance engagement. But suppose asking, hey, have you seen where the fellow is working? Have you seen his salary slip? Have you seen whether the house is a genuine house? Have you gone and seen the kata of the house? Have you seen the property papers? So if you were trying to get the entire profile, and as we go more and more, it becomes from a limited assurance, it slowly move towards reasonable assurance. But at the end of it also, we still don't know. Let us also be clear. How much ever we do, sometimes we see, oh, fantastic couple. Then after we find out, after 1 or 2 years.
That is a risk.
That is a risk. Yes, that is a risk. So that is the difference between a reasonable assurance and a limited assurance. So the thing is, one of the things which we hold out through the audit report is we consider materiality. What is materiality? So you send me the audit report saying the accounts presented to a fair view of the state of affairs of the branch, and I ask you, how certain are you? What is the margin of variation? Is it plus or minus 10%, plus or minus 5%, plus or minus 1%? So he will look at you and say, sir, it is plus or minus 10%, let us say. I am reasonably sure it is within plus or minus 10%. The next question you ask, what is plus or minus 10%? Is it, what is reasonably sure? 99% sure? 90% sure? 95% sure? Different, so that is the confidence level. Other is the, what is the other variation called? So, materiality is the expectation of what is the mistakes which could remain. The risk, as the speaker was saying, which could still remain after doing the audit, which we could not find through our procedures. What will be the mistake? So materiality defines, it is not the mistakes found by us. It is the mistake which is left behind, the estimate of the uncorrected errors. So that is something which you have to understand. Sometimes they say materiality, we said any MOC above 50,000 only is considered, less than 50,000 not considered. That is not materiality. Materiality is you do the audit to make sure that what is the final product falls within a particular range. This, as per the guidance note, has to be communicated by the central auditor to the branch auditor. If it doesn't come, your entire work is useless. You may say the account presents a true and fair view, but you have no clarity on the materiality. An important part of the audit report is scope limitation. What is scope limitation? Any restriction put on your scope by the management and the central auditor also. That also can, including the time schedule. If you are not happy, you can mention it specifically as a scope limitation. But if you don't want the fellows to jump, you put it in some part of your report, but don't mention scope limitation, so that at least it passes through. So if the information called for is not given to you, you call for certain information, it doesn't come to you, you put a scope limitation. The question comes between engagement letter, which sets the terms of engagement. That engagement letter is only given to the central auditors, not given to the branch auditors. Strictly, it should be, don't have to worry, the appointment letter itself is the engagement letter, as far as we are concerned. The format of the audit report very clearly says management is responsible for the audit. Let us not break our head over the engagement letter. Representation letter also, you can, if the branch is ready to give you as per the institute format, but take representation on matters on which you have taken the oral confirmation from the branch auditor, from the branch. Suppose, see one example, branch has got no extension counters. First day when you go, you ask, he said yes. So you jot down all the points which comes. Branch has got no extension counters, branch is not doing foreign exchange business. You jot down all the points which you have already discussed with the manager and ask him to sign on it. The institute format is there, which is very, very, very general. But on specific points which you have asked for and obtained the confirmation from the branch auditor, jot it down and take the step. Then, identifying and conveying your requirements at the inception of the audit is the most important thing. Once you are an experienced auditor, you will know that you require 150 different things. So, just as the one big letter, appointment letter will come from the central office giving you, so these are the certificates we signed, this is done, that will be done. You convert that into your requirements and send it to the branch head saying that when you keep everything ready, once everything is ready, you call me, then I'll come and do the branch audit. Okay? So, and automatically you will come to know, and we have our practices. When was it given? We also make a note. So, some of the things, the audit was supposed to be completed on 5th of April, but the information called for came on 10th of April or 15th of April. So, we have a record of how the information flowed to the auditor. So, information flow, when it came to you, and on the last day when you sign off, they will give you one particular statement which is nothing but the statement of advances, which will show how the calculation of sector-wise, security-wise, etc. was done. Till then they won't have given you. Why? For generating the statement, the server will take all the time. So they won't be able to generate any of the statements. The computer also is a human being. You ask it too many things to do, it will also decide its priorities and give its things in its own time. So the thing is, you have to mention this has come on the last day, I have not been able to verify. Lot of statements. So you make yourself clear and convey through our audit report how the audit has been done. And the most interesting thing is, there are about 90 to 100 signatures required from you on various returns. 17 are web-based returns. That is directly generated by CBS. Balance sheet, profit account, all the schedules and extras, etc. directly generated by CBS and given. In spite of that, they ask you to certify whether the balance sheet and profit account are as per the books of the branch. So in that case, you put a nice disclaimer. It is as generated from the system. The control over the same may be verified at HR. Don't take responsibility for the, what do you call it, system generated branch. So finally, when I close, the question comes is, what is this audit risk? Ultimately, we are worried about audit risk. So one of my relatives was a bank manager in a small village. A lady, she was a very sweet lady. She was telling me, your auditors are useless. That fellow came from somewhere, it's a remote village. He came over there. The first thing he asked, he took out his seals, told me which are the schedules to be signed by me. He signed. So, he put all the old chapa, put all the chapa, signed and met. So I told him this is a modern facet of audit. It is called risk-based audit approach. So he saw your face. He saw nothing could go wrong under you. So he signed the audit report and went. So similarly, other way is, which my guru Sadashirao KP Audit Company will say, what is the risk-based audit approach in a public sector audit? What will CA daily see when they come to review your work? Similarly, RBI, what will RBI see when it comes to review your work? Their focus is mainly on advances, and of course, and 95% of bank audit seminars go on advances only. So and how to do it is the whole purpose of a workshop. Workshops go a step ahead of seminars in trying to give some hands-on approach if possible. If not practical, they try to give examples and try to make you think more and put solutions and other things so that you debate. So with this small, what should I say, introduction to your 3-day workshop, I hope that you, what do you call it? At the end of it, you ask enough questions so the faculty goes back enlightened. Thank you.
Exactly, the last line was nothing. That's what I always do. I always do the ask more and more questions.
That was the experience CA Anil Kumar sir, and the association with the Bangalore branch he has for more than 4 decades, and also on bank branch audit. Thank you so much sir for raising the occasion, and thanks for the caveats what you have given and then those encouraging words. Keep encouraging us sir, thank you so much. Now we would like to felicitate today's chief guest, and then we'll move on to technical session.
Thank you. As far as I am concerned, you can't put a topi on me.
One time, why did you have to do this?
Thank you. Wait a lot.
Thank you so much sir, thank you ma'am.
Only that the Mundas is for the 5 stars. I still don't think I've reached the stage. That's the only explanation I can. Thank you.
Thank you, sir.
Thank you.
Thank you, ma'am. Now we'll move on to this enable session is over, and then we request CA R Sundararajan, Chennai, to continue with LFAR and certification.
Good afternoon, everybody. It's an immense pleasure to be with you on this occasion as part of the workshop. In fact, I was surprised by a call today morning with the officials here saying that the program is on or not because we have not been able to get in touch with each of us. Then they said that only a couple of days before we had a session on bank branch audit. Then I was surprised when there was a session on bank and branch audit just a couple of days back. What is the Sundaraj is going to do here in the workshop? They immediately said, sir, you please come and do what you did 2 years back on Zoom, because at that time, thanks to pandemic, we were not been able to meet. You had come and did something on 2021 as a workshop. You do the same thing now. At that time, unfortunately, I was given a topic on IRAC norms. So we were able to have a case studies in a detailed manner. So there were a couple of cases which I was able to pick it up and do the detail. This time they put me as in a limbo saying that you are going to handle on LFAR. So whether long form audit report, whether we can do a sort of case studies. In fact, the Chief Guest was also asking, what is that you have structured to have the people's thought process on a workshop on long form audit report? Hands-on experience. The point is, whether it is a lecture or a workshop or whatever it is, unless or else there is an interaction, it has to be a two-way interaction. Because unless or else you tell us what is that I have communicated to you, I have reached you, I will not be able to go with the satisfaction. So let us come to an understanding that at the end of the workshop, you have made me richer in experience, you have made me richer by further questions, because the questions only has to keep on increasing, because in Tamil there is a song, you have to ask as many questions as possible so that you get the best of the answer. There's a film song, I don't know whether any Tamils are here, there's a film song of India which says that you have to ask as many questions as possible in your life to have as many best answers as possible. With this prelude, I would like to go to the session per se. You can ask the question at any point of time. The organizers have told me that the break can be around 4 o'clock. Once again, plus or minus 15 minutes. In the words of Chief Guest, plus or minus 15 minutes. Because where the particular position is there as far as presentation is concerned, I will go to it. The topic today is long form audit report and certifications. It's a workshop. As I told you, whether it's a workshop or lecture doesn't matter. I don't want to be a lecture, monotonous lecture. Wherever questions are there, I will definitely involve you. Please get involved so that it will be better. There is nothing like 100% right or 100% wrong as far as bank branch audit is concerned. Any audit is for that matter. Any audit for that matter, there is nothing like 100% right or wrong. We are only saying true and fair. We don't say 100% correct. It's not possible. The audit risk is too high, and particularly in bank branch audit, it is further high. So the traditional banking has itself has gone under a process of change. Equally our audit, both in terms of techniques as well as in the areas of verification. It is not that it's only a verification of balance sheet. Sometime I hope, probably some senior members who are available here can understand that. Some few years before, I have been addressing on this bank audit for almost 25 years, and I am sure that I will be doing for another 3-4 years, because after that definitely bank audit will vanish. That is what the way it goes. Because this year, this particular year alone, the statistics known to me, I am telling you, Indian Bank alone, 600 branches have gone out of audit this year. 600 new branches have gone out of audit. Which means so many thousands of branches were there. Already lots of branches have gone out of audit. This year, additionally 600 branches have gone out of audit. I hope all of you would have gone through the circular of Reserve Bank of India giving guidelines for appointment of branch auditors and central such auditors, in which they have given an independence to the management to identify which are all the branches to be done for the audit. So in that situation, next 4 or 5 years, this will go away. 10 years back onwards, I have been telling this. In fact, that has gone true in the last few years because number of branches are kept on going down. So the number of branches have gone down, that's one issue, and the methodology of audit has also undergone a serious change. Ultimately, aim is to give a true and fair view only, but the methodology have absolutely changed, particularly in the view of core banking solutions. But the two major activities of a bank, which are acceptance of deposits and giving of loans, have not changed. That continues to be the same, and that is the place where our real audit technology is there. And as far as branch assured is concerned, both the items have to be verified, both liabilities and assets has to be verified. Profit and loss account, our extent is very much lesser when compared with assets and liabilities, because there is more of a revenue audit perspective. There would have been a revenue audit in the branch, they would have covered all those areas, we will be covering to a limited extent, but there is a portion which is to be done also. And advances, as all of us know, is the chief revenue sources. In fact, during the period of previous interaction with the chief guest was asking me, in fact, you would have to go away from advances, because advances, very many people have discussed about that in IR accounts, etc. So more than advances, we have to see on LFA and other materials. I concur with them, because many of us don't go into that area. But the reality is, this is the major portion of the area of a branch audit. So we have to concentrate more on this, and then we have to go to the other items. These are the items for today's discussion. Regular audit report, which is a short form audit report, which talks about management's responsibility, our responsibility, etc. Second portion is long form audit report, which has two portions. One is in respect of advances, and another is in respect of general. And the last one is certification. This is the topic for the day. What is it we are going to talk about? Short form audit report. It's only a limited exercise. What is a limited exercise? LFAR is not the final report. Statutory audit report is only the main short form audit report which is being given, which states that financial statements have been verified, balance sheets have been verified, P&L report has been verified, annexures have been given, and if there are any differences, I have given an MOC. In fact, a couple of days back, I had addressed another branch of Chengalpattu in Chennai, where the chief guest was a retired banker. He came and said, so it was a subtle point, even though I was not fully agreeing with that was a subtle point. What he said is, as far as the bank branch audit is concerned, we don't alter the statements at all. So in that situation, why don't we have a thought process of going and signing all the financial statements at the first stage itself and keep it ready? Because if at all any difference is there, it's going to be only in MOC and the main audit report. So let us sign all the statements which has been given to us, so that we will not miss in the last day. It was a suggestion from his side, but I had two reservations on this. One is, once you have some MOC, even though it is not going to be part of anywhere in the basic returns, the management, there will be collision between the management and you. So the other statements we have signed will have a go for a 6, number one. Second important issue, as far as bank branch audit is concerned, once you sign the financial statements, the next moment also you will not get any cooperation. So in this scenario, I made it very clear, sir, with due respect to you, this is not a viable solution, but I did not want to tell in the stage, because with the due respect to the speaker. The point is, one critical point which we have to undertake on this particular item is because he was a retired general manager. He knew this. We miss out a couple of returns at the time of writing the financial statements. So you will have to have a necessary checklist along with the short form audit report, what are all the enclosures which you are giving. Please ensure that all the papers are signed at the branch level itself, because once you come out of the branch, you might not be able to see any of the data which is being required for particularly giving a particular certificate. It can be a nil certificate. See, what happened is, no advances were there beyond 10 crores. There is a certificate. So in that situation, unless unless you are at the branch level, you may not be able to verify at all unless unless you have a elephant memory to understand what is the number of items and how many advances are there. Nothing is more than 10 crores. Simple example I am telling you. So whenever a certificate is being given, please ensure that you give it at that point of time itself, because once you come out of it, then it will be a blind signature only. So that is not acceptable. So main audit report, which is short form audit report, is very, very critical. Please go through that. Even though it is a standardized norms, there is no much of a verification. As the chief guest was telling, you can think about scope of limitation. If at all there is a scope of limitation, you will have to examine that. If it is there, you are authorized to amend. There is no compulsion that it has to be taken as given as a printout by the management. You can modify it. To this extent, short form audit report is complete. I don't have any particular item as far as this discussion is required. But long form audit report, definitely I will go through that, and certifications I will go through that. The long form audit report, all of you know, but still I want to insist because I see a couple of youngsters here. It's a questionnaire prepared by the Reserve Bank of India. Actually speaking, there were long form audit report, the earlier occasions which were very, very less in number, hardly 7 or 8 pages. Senior members will understand this. There are only 6 or 7 pages of the long form audit report was there. But one advantage of long form audit report is it starts with cash. Start with cash, covers all the assets including advances, and covers all the liabilities, and goes to the P&L account and ends up with miscellaneous. It's an effectively a very, very good checklist for us. Very, very good checklist for us. If you cover this long form audit report in a proper manner, I can be rest assured that I have done a good audit. Ultimately, there is the intention. One good item about this audit is whether we have got the fees. The second important item is satisfaction. Whether we have done an audit with the proper satisfaction. For that, a checklist is required, and the questionnaire is prepared by Reserve Bank of India, who have been continuously expanding the scope. In 2021-22, they have expanded phenomenally, and that continues to be in 2022-23 also. But still, we have to understand that it's formed by the serious discussions at the RBI level, and they have only formed the questionnaire. So questionnaire has a significant importance. The purpose and importance I will have to tell you, all of us know, but still it is required, because being a workshop you have to understand what is the purpose and importance, then only we will be able to understand the seriousness of the long form audit report. Because what happens is, the branch management is also not interested. Once you sign the financial statements of P&L balance sheet and audit report, they are very happy. Long form audit report tells us whatever you want to fill up, you can fill up, sir, because it does not have a financial impact. That is what the assumption is. But the reality is not that. The entire systemic issue of the bank is focused when you go through the long form audit report. Each and every question you can go through that. Each and every question leads the auditor to see whether there are some internal control weaknesses are there. Each and every question, be it cash on hand, be it ATM cash, be it bank balances, be it advances, wherever it is there, the questions leads you to examine the internal controls so that the audit will be more effective. The insight of the back branch happens only in long form audit report. And Reserve Bank of India monitors the smallest of the smallest branch only through long form audit report. Because they don't get the copy of the audit report, they don't get the copy of the balance sheet which you are signing. But each and every smallest of the smallest branch also, long form audit report one copy is being sent to Reserve Bank of India. And don't presume that it is not being seen by Reserve Bank of India. There is one department which is created only for the purpose of scrutiny of long form audit report at the end of the year. Every year without exception, there is a huge exercise which happens. In fact, chart rooms also go and help. In fact. So there is a system which is available. Please understand that your LFAR is in detail verified by somebody at Reserve Bank of India. Whistleblower. Long form audit report can be a whistleblower. A small item in the password mechanism in the information technology area, in the long form audit, to put a small word saying that the password mechanism which is being maintained at the branch level is not sacredly maintained, not secretly maintained, sacredly maintained. There is a difference between sacred and secret. I hope all of you know. It is not sacredly maintained. I will share a classic example because examples only will make the understanding reach the mind. I was doing an audit of a State Bank of India branch, which was a scale 3 branch. That manager, chief manager, the scale 3 manager was just promoted from scale 2 to scale 3. I am talking about should be around 12-13 years back. He was promoted from scale 2 to scale 3 and is due to retire in the next 2 months. So that is the level at which he was promoted only for the purpose of ensuring that he gets the benefit of the higher career scale, considering his long-term services and nothing more. Obviously, he was not aware of any information technology issues at all. He does not even know how to log in, log out. So every day, he has to depend on his clerk, who is called as a special assistant. I hope all of you know, would have seen this position in the banks. Special assistant. A clerk who has been there for a long time in a particular branch, he was not able to either get promoted because of his own quality, or he doesn't want to get promoted because once it is promoted, he will be transferred. So he will be continuing there for long. More than 15-20 years, he will be in the same branch. He is called as special assistant. He's slightly one grade above, so I'm a police officer. A constable is there, head constable is there, like that. He's special assistant. So he was using his utility for the purpose of inquiry. I observed that. How did I observe? I was asking to the branch manager, asking for this, that, etc. Immediately he calls, hey Ram, he calls that person by name. Divakar, come. Divakar comes, ensure that he opens and goes away. Next day I was asking for some report. He said, Divakar, come. He comes and makes a report. I was asking him, sir, how is it right, sir? Is this not right? Is this right? Is this right? Don't you think that there is a serious significant issues on this? Sir, there might be some individual, but I don't understand because I am not tech savvy. I am going to retire in the next 1 month. That is the month of April I am going to retire. In that long form audit report, I had mentioned in respect of this information technology issue, I could not say that the compromise of password is there. That was not the point. I certainly said that the information technology verification area is not, it's not sacred here because that logging in and logging out is not methodically done by the concerned officers in a proper manner. It shall be looked at by way of a proper education on password mechanism. With that I left it. After 2 years, I understood that there was a fraud in that particular branch committed with the same special assistant. Where did he do? He utilized that particular password and did inoperative accounts converted into operative accounts, inoperative PPF accounts into operative PPF accounts. From the operative PPF accounts, he transferred some amount to the inoperative SB accounts, and from the inoperative SB accounts, he issued checks by utilizing the password of that particular branch manager, and the checks were issued and he was drawing the money consistently. If only that considered as a whistleblower mechanism, but what happened is, the next year, there was a situation where the special assistant was looking after the government account reconciliation. He was only looking at the government account reconciliation and clearing reconciliation. That auditor has also mentioned about this, the same person, there is no rotation of auditors. Unfortunately, none of these things have been taken up for early warning signals. So fraud has happened. Of course, by the time it crossed 20-30 lakhs, they caught him. Somehow they caught him, and why I am telling this is, in case I have not reported, and the bank says, they have not given any letter or notice to us in that situation, but in case I have not given a report, and subsequently the bank has said that if only this has been reported, we could have found out. Because during the investigation, the manager has said that he has been utilizing my password. He has said, after retirement, nobody is going to catch him. If only on that basis they come and ask me a question, I will be blinking openly, saying that I have not reported. Whether this is a serious error or non-serious error, very serious error. It is not related to advances. It is not related to advances, but it is related to the systemic error of a particular branch. Please understand, this is not exaggerated. This is a reality. I will tell you one more classic example. If you have any specific questions on this, you can definitely ask, because sir, it could have been done like that, it could have been done. If you have any specific questions, please put up an argument. One more branch where I was a concurrent auditor some 10 years back in Telangana. Now at that time Andhra Pradesh, now it's Telangana. I had done an audit of a concurrent audit branch. In the current account and CC account of a particular party, there are continuous cash drawings, heavy cash drawings were there. Because in LFR, one question will come regarding end use of funds. For that, I am giving this prelude. I had given a report saying that in this particular CC account, there are lots of transfers to a current account, and from the current account, there are lots of cash drawings. We are not able to ascertain what is the end use of the funds, and there are also a lot of cash transactions there. Honestly telling, my dear friends, honestly telling, I did not suspect any serious issue at that point of time. I did not suspect. But only thing is, I was able to understand in that particular current account, huge cash drawings were there. That was the only situation, nothing else. So I gave a report. After 3.5 years, I got a letter from CBC of Telangana asking for information about a particular branch. You have any specific report, or if you have any specific observations in respect of this particular branch, in respect of the following companies. They mentioned about this 3 current accounts. Out of 6 current accounts I have reported, they mentioned 3 current accounts. And I said, yes, there were lots of cash transactions. And they also said that is there any specific observation in respect of this? Have you reported any of these items? We had to give a concrete reply saying that yes, in these cases, there are lots of cash drawings were there, which has been reported in this respective returns of that particular account, current account details. It's like any, what you call, there will be a question in current account, any extraordinary or unusual items are there. I have given a report in the current account. Not related to branch statutory report, but related to concurrent report. Ultimately, it was found out that it is that 3 accounts were replaced as for the purpose of PMLA activities, not abroad, by the local politicians. The politicians were taken up for task, and once they were taken to task, this examination was happening. Unfortunately, the next year's statutory auditor was asked the same question. He could not give a reply on this particular matter. He was taken to task. Why I am telling this is, we don't know what will happen, when will happen. But at the same time, seriously, bank branch audit is very, very serious. In fact, recently the president was telling in one of the seminars saying that audit is a serious matter. If you are not able to be serious, don't do it. It was interpreted by the members that what is this? President is saying that don't do auditing. He did not say don't do auditing. He said auditing has become a serious matter. If you are not serious, don't do the audit. That was the intention. It is furthermore serious in case of a bank audit. So please understand, this your LFR can be a whistleblower for the irregularities which is going to happen at a later date. LFR is not a substitute but a supplementary. It is not substitute for your main report. This is what I said. I will be talking about main report periodically. It is not a substitute. It should be a supplementary, additional information. It is a management report. And it is not going to be significant for the main report. And it is not an expression of an opinion. You can have an expression of opinion in the main report. I opine, in my opinion, it is happening in the main report. In the long format report, I state, in respect of the advances examined by you, whether the credit appraisal mechanism has been properly done by the branch or not. You have to say either yes or no. You cannot say in my opinion. It is not possible. Because they are asking no only in respect of the advances examined by you. They are not saying asking a generic question for you to give a generic reply. So it is not an expression of opinion, it's actually something equivalent to your 44AB. In 44AB you cannot give an opinion except for a couple of questions where it has to be done like that only. For example, in case of a 40A3, you may not be able to say 100%, you will say that except in case of this account pay, class 6, etc. You give some opinion. Like that. Here also we can give an opinion, but the reality is long format report, it's a factual reporting. And once you give an opinion in certain places, it should have an elaboration. You cannot say, as I was telling you about this information technology area, you have to have the elaboration saying that what will happen in case there is a compromise in respect of passwords. You have to necessarily mention, without the elaboration, it will not have any impact. Wherever there are changes, please propose MOC. Wherever there are changes which have an effect on the financials, prepare an MOC. This is why I always tell, any issues in long form audit report need not find a place in MOC. But any item in MOC will definitely find a place in LFR. Contrary is not true. See, once you find an LFR, everything will not be finding in MOC. But once you have an MOC, it will find a place in long form audit report in none of those areas. Maybe income recognition, maybe sundry assets write-off, or maybe asset provisioning, asset classification, etc. I'll just quickly jump onto this. As I told you, LFR and main audit report are totally different. It need not be same. And the matters are only illustrative, it is not exhaustive. Don't presume that you are given all the reports, it is not possible. And as I told you, not all adverse comments will attract MOC. There can be adverse comments, but all the adverse comments need not be in MOC.
Sir, the example that what you have given related to your password, so what kind of documentation we can keep for the audit evidence?
The password compromise by the chief manager.
Yes.
I had taken a letter from him at that point of time. I had taken a letter from him that he utilizes that particular team for examining, logging in and logging out because he is not examined. Because I asked him whether you are put on training. I did not take it in MRL. MRL is dangerous. MRL is not advisable because once you take an MRL on this matter, you are bound by that. It was a subtle letter which he has given to me saying that it was a very, very subtle letter. I also did not want him to be bound because of that. So it should be a subtle letter. The other option which is available is whenever the verification happens, you also get involved and say that record both the people's name and put it in your notebook. Because after 2 years or 3 years, obviously you will not remember this particular, not in the case of your regular client. In your regular client, the account is known to you for 40 years. But as far as bank is concerned, it is not the case. So you can let out all those things, keep it on your record. Nobody can question your audit documentation related date. It is not possible. Everything and anything cannot be having a document also. In your notebook, you can write. What are the components of LFR? One is general LFR, all of us know. I will go through that independently. And large critical advances, 10 crores. Previously it was 2 crores, now it is 10 crores. Question are applicable to specialized branches. That is asset recovery branch, overseas branch, service branch, etc. If at all it comes to you, that also we will be having one more questionnaire. And LFR per se is divided into 4 categories. What is that? One is assets, liabilities, profit and loss account, and general. This is what I said. If you cover the long form audit, it's a beautiful checklist for us. It's a bless for us to ensure that itself acts as a checklist. Only thing is we don't go through this long form audit report in a detailed manner. Ultimately, I find it difficult that as if we are not covered the areas. It's a huge tool. Central statutory auditors sees through your eyes the branch. They cannot come to all the branches because please understand, they are committing you. They are committing you in the audit report because what they are saying is, we have audited 20 branches of our bank and we have considered the audit report of various other branch auditors. They are taking it, they are committing on your behalf to the Reserve Bank of India and to the members. So obviously they are taking your LFAR as they are seeing the branches through your eyes. So they are going to utilize your item as a tool. Incoming auditor, like what I always say, that whenever you go for audit, you see the previous LFAR. Your LFAR is going to be the LFAR for the tool for the next year auditor. Regulators and top management, as I told you, top management is not getting all the information about this Excel sheet, etc. But they get one copy of the LFAR. LFAR is in 6 copies. Nowadays it is not signature, it is online filing only. But Reserve Bank of India gets 1 copy, as I told you already. So please look at that. It is going to the regulator directly. For you itself completing the tool of audit, as I told you already, it's a checklist, self-appraisal. It's always better that you understand what all the areas you are verifying. What are the essential ingredients? Timely reporting. LFAR has to run concurrently with your audit. LFAR cannot be separately going on. That is, give LFAR to one staff who will be doing that, give IRAC to another person. It's not like that. A person who is doing the IRAC norms has to cover the documents relating to LFAR as far as IRAC also. A person who is verifying the sundry deposits, sundry assets has to see the LFAR also simultaneously, because he cannot see, somebody cannot see the schedule separately and somebody else cannot see the LFAR separately. And it has to be done along with the main report. I repeat, if you sign the main report of the balance sheet and ask for information out for LFAR, you will not get it. So you have to hold all those items before you complete the LFAR. Vague and general remarks are not accepted by the regulators anymore, because this is the main reason. This is not my version. PDC people who have been going and meeting this Reserve Bank of India people, I have some quite acquaintance with this PDC people because of my association with the both central and regional office of the ICA. The RBI is asking them the question, what is the value addition you are getting in respect of small branches? No value addition is being given. They are giving just yes, no, not applicable, and they are signing the LFAR. We are not getting the value addition at all. That is why we are avoiding small branches. They have started with the 3 crores advances, subsequently they made us 5 crores, then they made us 20 crores advances are not covered by the audit. This year, 70% of the advance of the branch as a whole, if it is covered, they are happy. So top 20 branches will cover almost. That is the problem. Please avoid general and vague remarks. Analytical evaluation of statistical information. Whatever be the statistical information you get, please analyze it properly. One classic example is comparison between the profitability of this year and profitability of the current year. There is a question in non-formal report that I will explain to you once again. But this happens, you have to give the analytical information about that. Whenever you have comments on the accounts, please give full details. What do you mean by full details? Name of the borrower, constitution of the borrower, whether it is a private limited company or partnership firm or proprietorship firm, because each and every sentence has a significant importance at the time of conclusion by the head office auditors. Because if they have to consider your point as serious, you have to give the entire information, otherwise they will not consider it as serious at all. Advanced information on critical accounts and potential NPAs, very, very important. Long audit report raises this question regularly in multiple places. And RBI also says during that AFI, I am coming and identifying these accounts as NPA. Why this was not identified by the statutory in the earlier years? When we come as once in 3 years as a part of annual financial inspection, and we find out these accounts as non-performing assets, why this was not identified by the statutory in the earlier case? It's one area. Second area, this year it is becoming an NPA. Already the sickness would have been shown in the earlier years. Not that all the accounts will become ILFS. ILFS only in March it was a good account, in April it became a bad account. Not all the accounts will happen like that. So they are asking, there should be an incipient sickness or potential NPAs which are there. Why it is not being highlighted by the auditors? So it's ideal if you can look at that and examine and review. Let us take a couple of examples. There is a CC account, regularly operated, credits are coming, everything is coming regularly. But there are two issues as far as this branch is concerned. It is continuously overdrawn. Continuously overdrawn. Limit is there, 10 lakh, but always it goes to 10 lakh and 50,000 and come back to 10 lakh. 10 lakh and 50,000 come back to 10 lakh. Which means that there is a significant impact of indiscipline in the borrower. One example. Next example. Everything is coming. Whenever the interest account is debited, immediately the money is coming. And transactions are very good in this particular account because they have a limit of 1 crore. It's always coming between 85 to 90 lakhs only. No problem. The operators are very good. But the limit has been given for 1 crore. Obviously, the turnover should be at least 3 crores. So the current account does not have credits to the extent of 3 crores in that account. It's an incipient sickness. How is it incipient sickness, sir? They are only not depositing here. They are making that money. How do you know? The bankers can know the money is operated properly and they are doing turnover only by bringing the money into the system. Particularly in view of non-cash system which is happening in India, you cannot be there without bringing those money to the system. So there are two dangers of this particular item. One is either the turnover is wrong or total lies, or second item, the turnover is being deposited in some other current account. Both these items are potential NPAs. Not today, at some point of time it will become potential NPA because funds are getting diverted. Am I clear in these two examples? There are lots of examples which you can go through, but am I clear in these two examples? If you have any specific query, you can definitely ask. The first portion is advances on LFAR. The chief guest wanted me to consider other than LFAR first and then go for LFAR, advances. But I consider advances as important. I leave it to the audience here, which you would like me to handle first. Advances or others? Which one is? Advances. Good, thank you. So when you go to advances, since I am seeing a couple of youngsters here, I am just telling you, the entire advances of the branch is covered into 4 categories only. Demand and term loan, CC, OD and bills. These are the only 4 categories. Whatever be the nature of facility which is coming, which will definitely fall into one of these areas only. So I have already circulated this content to the branch. They will be circulating to you. You don't have to take a note of this except for what I am giving as an examples, because examples I am not able to put it in the slides, but slides will come to you. I have already given to the branch. So these are the 4 types of loan. Whichever loan you say, let it be education loan, let it be agriculture loan, let it be business loan, let it be self-employed, let it be mortgage loan, but it will come in one of these segments only. So these are the only 4 segments of loan which we are supposed to report. And as far as advance is concerned, it is classified into various categories on the basis of geography, that is on the basis of funding, funded, non-funded. All of you, I hope all of you know, the advances are 2 categories, one is fund-based and non-fund-based. When the bank gives out money, it becomes funded advances. When they gives out paper by way of guarantee or the letter of credit, it is non-funded. But still, I am going to take a risk. The bank is taking a risk of giving the money at a later time in case it is defaulted. So it is non-funded today, it can end up as funding subsequently. So as far as funding is concerned, funded and non-funded, on the basis of geography, inland and export, so it can be packing credit, it can be foreign bill discounted as far as exports are concerned. As far as inland is concerned, it's a open cash credit, key cash credit. On the basis of the security, you have secured and secured. And as far as sector is concerned, priority sector and non-priority sector. Why all these things are required? Anyway, you are supposed to sign a statement, as Chief Guest was telling, regarding the classification of advances. On the basis of security, non-security, secured, it's not unsecured, secured, guaranteed by government, unsecured. Secured by tangible assets, guaranteed by government and others. Same way on priority, non-priority. All these things are automatically done by the system, but you have to examine whether it is coming properly or not. So how do you verify the advances? First starting point is statement as on 31st of March 2023. That is going to be the starting point for you. On the basis of that, you will decide on the extent of verification. What is the extent of verification? I will come to that subsequently. And then I will go to the stage of verification. What are the stage of verification? First thing is I have to have some statement that is going to be verified by us. That is standard advances and standard advances and other advances, performing and non-performing assets. Performing assets, invariably they don't give you a printout because it runs to huge number of pages. Whereas non-performing assets, they take a printout and give it to you. But as far as standard advances are concerned, you can spool it in the Excel sheet and you can download it in your working paper. You can take it. On that basis, you can verify that. The extent, on the basis of this analysis of the statement which you receive, you have to do the extent of verification. And after you decide on the extent of verification, you go to a stage of verification. What are all the items you have to verify? I will explain to you at that point of time. When you do the stage of verification, we determine what are the indicators of frauds. That is potential sickness, potential NPAs, dangerous accounts, irregular accounts. All these things will be coming as part of the stage of verification. After that, you verify the non-fund based advances, which is the letter of credits and bank guarantee. And last is important, reporting of verification and rectification. Long form audit report, you will report all the discrepancies. That is reporting of verification. Whenever an item requires correction, you go pass for an MOC. So as far as the advances are concerned, you verify it. You find any errors, you have to necessarily report. If the error ends up in a profitability change, you have to give an MOC. Am I clear on this? So what is that you have to ask? So whenever you go for an audit, what is that you have to ask? This is the start, as I told you in the initial stages, ask for a question, you get an answer. In Tamil we say, definitely it should be there in that also. Kelugal kodukappadum, thattungal thakappadum. You knock at the door, it will open. Otherwise, nobody will open it. So you have to ask the question to the branch people. What are the questions you have to ask? 3 important items, rather 4. Number 1, what are the sanctioning powers of the branch? There will be a letter of sanction listing as far as this branch limit is concerned, RO limit is concerned, ZO limit is concerned, head office limit is concerned. There will be a sanction letter which will be available in the documentation manual of the branch. Please ask for that. Because depending upon that, one of the first question in the main report is whether the powers of the branch has been exceeded or not. There will be a question in the audit report. All the transactions which has been done by the branch are coming within the powers of the branch. There is question, we are committing ourselves. That can come, you can commit only after obtaining the sanctioning powers of the branch. And the next item which you will have to ask is, what is the NPA statement of the previous year? Because that is going to be the starting point of view. If it is an NPA last year, it can definitely will not be a performing asset unless otherwise the entire amount is recovered, which is very, very remote possibility. So, what is an NPA in the last year also will be an NPA in the last year, number 1. If it is a normal NPA, that is substandard assets in the last year, it will have become to doubtful assets in the current year. And if it was doubtful in the first year, last year, it will become doubtful 2 and 3 this year. So, for this purpose, you will have to see the NPA of the previous year. Not only that, in the certification, we will have to give a certificate in respect of NPAs, movement of NPAs, opening balance, current year additions, recoveries during the year, closing balance, write-off, closing balance. If you have to have the certificate to be signed by you, you need to start with the opening balance. As for it, you need to have a break. Sir, why are you asking this? Will there be a branch without a break? Please understand, I had a branch. In a syndicate bank, one of the branches in Tiruvannamalai where I have gone for an audit, the rural branch, they have lost the last year NPA statement. I don't know whether they lost it for the sake of lost it or wanted lost it, I don't know. But ultimately they did not get it at all. So in that situation, I had to give a disclaimer in the NPA stating that opening balance I have verified because that was given in the last year's certificate, but the breakup is not available. That is, there was an NPA to the extent of some 1.5 crores in the agriculture advances. They did not have a breakup of it. So we don't know whether A was an NPA, B was an NPA, like that we did not have. So we had to give a disclaimer saying that the breakup of the opening balance is not available at the branch level. We also, sir was asking about the documentation. In this particular case, they did not have it. We escalated the matter to the regional office. This NPA of opening balance is not available. If you have anything, please share it with us for us to identify. They also said, express their inability. No, I am not able to get it. Only after that we finalized it. Because I will tell you, my dear friends, we will do the audit at the branch level and go away. Regional office people will come and sit on your head asking you to change the report. Which is very, very tough. And you will have to spend once again for that travel. Because second time travel they will not provide. So particularly if it is an outstation branch. So please ask for the NPA of the previous year. And the next item is balance sheet and P&L account of the previous year. Obviously, that is important. And the last one is audit report and non-form audit report of the previous batch. Because that is going to give you funda of information on the basis of which you will have to decide what are the areas which you are supposed to finalize it. What are the statements? I told you statements on 31st of March 2023. Then I will have to explain to you what are the statements. Those who have been doing the audit, you will know, but still I would like to mention all these things because there may be some branches where one item will not be there. There is a very possibility one branch it may not be there. First is facility-wise, party-wise accounts are outstanding along with the outstanding balance. It is basically a standard and substandard as well. There will be a loan analysis summary which will be available. Previously it was taken as a printout and they got their own sale also from us earlier. Now they stopped because the numbers are going very, very big. That is the first item, which consists of party-wise and also facility-wise. Second is, as far as CCOD accounts is concerned, both debit and credit balances transactions are there with the turnover. There is an account called CCOD account with the transactions during this year. Normally, in any branches for that matter, the CCOD accounts will be lesser, unless and otherwise the branch is in hub of a country, hub of a state, hub of a city. For example, an organization in Bangalore, Maine will definitely have a lot of CCOD accounts. But normally any other branches outside, there will be more of a term loan only. CC account, OD account will be lesser. Basically because the borrowers are not directly tech savvy to provide information to the bankers as they were asking about CCOD accounts. Whereas term loan accounts, there is no regular accounts, regular transactions is being asked by the branch. List of accounts where regular or ad hoc limit is due for renewal but has not been renewed. Very, very important, because once an item is due for renewal, within 90 days it should be renewed. If it is missed by 90 days, another 90 days grace time is given by Reserve Bank of India. So which means 180 days is the upper limit available for doing a renewal of a limit. If it is not renewed within 180 days, it will become NPA. If it is not renewed within 3 months itself, it will become SMA 0. Then it will become SMA 1, SMA 2 and finally it becomes an NPA. Sir, there is a short-term review which has been done by the zone officer. Can I accept it? Sir, there is a limited review which has been done by the head officer. Can I accept it? Nothing can accept. Because please go through the circular of the Reserve Bank of India. They make it very, very clear. Identifying the difficulties faced by the large business of borrowers to provide the information in time for the purpose of renewal or review. It is hereby decided to provide 3 additional months for the purpose of this thing. So the review or renewal has to happen with the overall limits of 180 days. This is the time which has been given by the Reserve Bank of India. See, after they are the authority, they have given the time. Do you have any option? You don't. One possibility is, now 31st of March is expired, but 3rd of April or 4th of April they come and give the renewal. You can accept it. Because even securing up to the data bench is acceptable in 1 or 2 occasions as far as bank card is concerned. Not in case of every audit, 1 or 2 cases is one of those cases. Where accounts are overdrawn beyond drawing power or sanction limit. See, all these things reports are available very much. In information technology, you can touch the system in the audit module, it will be available. And this we have to certify also. Where stock statements and book statements are in arrear, there is no reporting which we need not have to certify, but from that information we have to take a report and give it in the long form audit report. We are not going to certify it, but from that information we have to take. So, what is a stock and book date statement which is in arrear? What happens is month on month they have to give the financial statements as far as stock and book dates is concerned, as far as CC account is concerned. If it is not given in 1 month, what is going to happen? If it is not given in 1 month, what is going to happen? The next month, drawing power will become 0. But advantage is they are allowing 3 months stock statement can be there. Reserve Bank of India says that you can have to the extra 3 months stock statement, which means after 3 months only it will become an NPA. But once it is not received this month, it will become SMA 0. There are situations wherein in respect of CCOD accounts, stock statements need not be given at all, which is called as mortgage CC account. Mortgage CC. They give a property as a mortgage, 60% of the limit they take it as loan. In those cases, monthly stock statement need not be given, but they will have to give the annual stock statement once. So, the case which I am talking about here is in respect of stock or book dates which is given on month-on-month basis, on the basis of which drawing power is determined. I am talking about that particular statement here. On the basis of which drawing power is determined, because CC accounts become out of order once a balance outstanding is in excess of limit or drawing power. So the drawing power, wherever it is determined, those CC accounts and current accounts, that statement will come here. Where the stock audit is due but not done. Stock audit is normally done in respect of advances beyond 10 crores in most of the banks. There are few banks, they insist on stock audit even on 5 crores advances. But generally, about 10 crores they go for stock audit. So wherever stock audit is due, if it is not done, you have to have that statement will be available. From that you will have to give it in the form of a law firm audit report. There is one more question which will come at that point of time. Where no insurance or inadequate insurance has been taken. This is also there is one statement which is available. It limits vis-a-vis insurance policies. That also can be. We are not certifying that. That is going to be an information. Of these 9 items, you are not going to certify all the items. 3 or 4 items you certify. Other items you don't certify, but still they are to be required to verify that. Any questions? Then we will have to go to the extent of verification. I will go into this detailed areas of audit report. The extent of verification. What is the extent of verification as far as advance is concerned?
Sir,
How do you?
insurance is concerned, I have a question.
Insurance?
Insurance, not done, insurance is lapsed, pending for renewal. Will it generate a report? It may not be, because many of the things, they will have to update it manually. Unless they have updated it, we will not be able to get it.
Insurance policies will be updated manually, but the report will come. There is a report available regarding insurance expired.
That's an exception report.
It's an exception.
In all the
All the banks. Both Pinnacle, as well as banks, as well as Infosys. All these items they have.
You mean to say for the CCOD account?
CCOD. Wherever insurance concepts are there. CCOD account only. Not just for other items. CCOD account. So wherever insurance is a key item. So why this is key item is, so as far as CCOD accounts is concerned, once insurance gets expired and the party goes for wrong situation, for some wrong reasons, the loss cannot be claimed. In fact, I had a claim where we had regular limit, but still because of some other reasons we got mispaid. The claim was not given by the insurance company, and the bank asked us to reduce the limit. Instead of reducing the limit, we bought stocks subsequently out of our own funds by way of bringing in equity. So what happens is this margin has to be maintained on a regular basis. For that purpose, the stock statements are required. And whenever stock statements are required, definitely insurance should be there, because insurance is the backup for the bank as it is, apart from the borrower's personal guarantee and security. So selection of samples depends on existence and efficacy of internal control procedures and report from the various auditors. This is what I said. You will have to see the previous year LFA. See the current year RBI year, risk-based return audit given by the head office. If at all there was an AFI by the Reserve Bank of India, AFI. If at all there was an IS audit. If at all there was a stock audit. If there is a concurrent audit, there is a concurrent audit. If there is a revenue audit. If these auditors have been giving a good report as far as this branch is concerned, I will take a couple of samples. One is, the audits are there, all the audits are there, they are all giving a regular standard report that there are no issues at all. Then the extent of verification can come down, because the audit risk is lesser. All these audits are there, but a couple of auditors say that this is not there, that is not there, stock statements are not taken regularly, the branch is not inspecting the unit properly, inventory verification is not properly done by the branch management in a regular manner. Like that, there are some negative points, which is subsequently rectified. Doesn't matter, it has been subsequently rectified. In those cases, your extent of verification has to go up. If there is no audit at all, there is no RBA, there is no concurrent audit, etc. In that situation, your extent has to further go up. Leave all those items. None of the audits are there. There is no negative report at all. But the branch has maximum of only housing loan and loan on deposits. The extent is very, very low. Even though there is no audits, because items of more secured advances, less of unsecured advances, the extent of verification can come down. On the same example, my dear friends, you pick up a couple of cases and understand they have not done properly, my extent will once again go up. So there is no standard situation wherein you have to say that the extent of verification can be just like that, or it has to be very, very serious. You cannot presume that everything is clear and start the work. You have to say everything is wrong and you have to stop the work, and you get a comfort level. Like what you are telling, you are seeing the branch manager who is very bright and powerful and clear, and they are able to give all this information, you can leave it like that. That's a different issue. A branch manager will always be very, very powerful and clear. If they are very clear, that auditors will not be able to find out anything. So please understand, the extent of verification depends on your study of the transaction at that particular area. Leave about that. As far as non-formality report is concerned, 10% of the advances, both fund-based and non-fund-based put together, or 10 crores, whichever is less, is a large advance. Because what is large advance is defined. Why large advance is defined? Large advance is defined to ensure that all the large advances are examined by the auditors. So extent of verification does not have any question or answer for you, all the large advances of the branch has to be verified by you. Whether concurrent audit is there, concurrent audit is clean, RBI is there, RBI is clean, doesn't matter. All the large advances we are supposed to verify. So the question comes only in respect of other advances. So first we have to understand what is large advances. It is 10% of the advances, both fund-based and non-fund based put together, or 10 crores, whichever is less. Previously it was 5% of the advances or 2 crores, whichever is less. At that time NFB was not there. Non-fund based advances was not there. So as far as the branch is concerned, they have a turnover they have a loans to the extent of 100 crores. They have non-fund based limits to the extent of 400 crores. So in that case, the large advance will be 50 crores and above. But there is a limit of 10 crores. So in that situation, all the above 10 crores advances has to be paid. Whichever is less, we know better because we have been talking about income tax right and there. So whichever is less, we have been reading up on all the sections. So 10% of the fund based and non-fund based are 10 crores, whichever is less. Take a small branch. There is a limit of total loans of 5 crores. There is a limit of 25 crores as fund-based advances. So in that situation, 3 crores is the large advance. 25 plus 5, total is 30 crores, 10% of the will become 3 crores. Any advance outstanding beyond 3 crores. In that situation, you should not presume that any advance of 10 crores or 3 crores is in respect of both fund-based and non-fund-based. No. If Sundararajan has a limit of 4 crores of CC account and 10 crores of non-fund based account, then I will be covered. If I have 1 crore of limit and 5 crore of non-fund based, I will not cover. Because once that determination of 10% of the advances is only for the purpose of fund based and non-fund based put together. But once you determine the limit, that limit will be applied only to the fund based borrowers account. Am I clear? Is there any doubt in this? Yes, sir.
So in case of this fund-based and non-fund-based, some companies or some borrowers, they take a CC account as well as a term loan account. So when you put both of them together, so is there a separate report wherein you get both per borrower, total borrower?
CC, term loan, bill purchase, foreign bill purchase, all put together is fund-based advance. BG and LC is non-fund-based advance. As I told you the other first stage itself, once the money goes out of the system of the bank, it is called as fund-based. In term loan account, it is a fund-based only, not CC. See, for this purpose, CC alone is not required. CC, term loan, short-term loan, whatever be the loan which you call for. Education loan, vehicle loan. If they have taken a car loan, that also will come into the picture. If monitoring is not good or high irregularities are there, then also your exchange has to verify. Where will you find this out? There will be a register called inspection register, which is very, very mechanically filled up with the branch management. Branch management will keep on mechanically fill up the physical verification register, but that should not be accepted as an auditor. Apart from the inspection, do they have an inspection report on a regular basis? You have to ask them. If that is not there, then you will not be able to satisfy yourself whether the inspection is properly done or not. So inspection, if it is not done properly or monitoring is not properly done, in those cases, verification system has to happen. Immediately you can ask me, sir, are we supposed to go and do the verification of this inventory or stock, security, etc.? We are not. As a branch auditor, we are not having a compulsion or definiteness to go and verify the securities or inventories as the case may be. But if you have a doubt in any particular case, you have the authority to go and verify. You have the authority, you can go and verify. But it is not required as a compulsive mechanism, because there is another system which is available by way of a stock auditor or concurrent who are under compulsion to verify all this. Concurrent auditors are supposed to verify all the large advances twice in a year, all the other advances once in a year. They have a standardization. Whether they are giving that report, you can go through the report and report on that basis. You don't have to go and verify. Now we have to go to the stages of verifications. Extent of verification, is there any doubt? Large advances we have to verify fully. Other advances we have to verify only on the basis of the available data and records, on the basis of the comfort level which you reach once you enter the branch and go through the documents of verification by way of verifying the various documents. That is why I always say, when you go for an audit, the first phase, the manager or manager of the audit team or the partner who is concerned has to straight away go with the previous audit report. Please go through that independently when the others have started doing the work. Within 1.5 days, you will be able to ascertain what is the level of extent of verification which you have to do, you will be able to do it. If you are not able to do it, then you are at a fault. So you have 1.5 days is sufficient for you to determine, because there will be 3 or 4 reports, whether you have to read from end to end, that is not the issue. See, all of us have a knack in our mind, where to catch, what not to catch, where to catch, what to catch, where not to catch, what not to catch. We have that. But only thing is we are not applying our mind. So please go through the report. In the RBI, the risk-based audit report of the particular head office is amazing. They sit through the system for 25-30 days. They go through each and every document. It is not that they don't miss even one smallest of the smallest documents. So they go through all the documents and give a report. Three chief manager rank people come. They are definitely so good. They go through that each and every item. In spite of that, they are not able to find out. That's what happened in PNB fraud. There have been RBI mechanism which has been there.
We'll have 1,500 pages.
Yeah, correct. But you don't have to read through all the 3,500 pages, because you know where your art lies. See what happens, no? Yes, no, it also it will be there. For example, they will talk about fire extinguishers. They will talk about lock and key mechanism, like that. That I don't have to see. But there will be a class called staff rotation register. You have to see. There will be KYC, ANC, AML question will be there. That you have to see. There will be a verification in respect of advances. That you have to definitely see. So it is for us to pick up those items and check up. There will be an umpteen number of items. That is, in fact, dress code of the people are also being questioned nowadays. That we don't have to verify. We can skip that and go away. But we have to find out what to see and what not to see. Yes, 1,500. See, our institute's bank guidance notice are 1,200 pages or something like that. Are we seeing that? We are seeing that. Definitely we are not seeing that. I was one person who have been advocating with the branch, with the guidance note generating team, that scrap this guidance note. I have been talking for this for so many 6 to 7 years. At least one item has happened, which has been put strongly from our Madras team. Make this guidance note into 2 parts, central church audit and branch church audit. That they have happened. 3 years back they made a separate book. Now they made us 2 parts. Part applicable for central church audit, part applicable for branch church audit. Because most of the items which you require we don't have to see. We need a central church audit. We don't have to see. You just take that book, we'll get sleep. So, like what we do in case of auditing book, correct? So what are the stages of verification? Once you determine the extent of verification, go to the stages of verification. I am informed that 4 o'clock there is going to have a break. Sir, what is it? 4 to 4:30. 4 to 4:30. So we'll have 4 to 4:30 is not a break time, sir. It should be only 15 minutes time because we don't have time for that. I am here in Bangalore. I don't have any issue. Tomorrow I am leaving. But I don't want to keep you holding beyond 6 hours, because after that, one by one people will start going up. That's not an issue. So what are the stages of verification? There are 4 stages of verification as far as any advances are concerned. Any advances are concerned, there are only 4 stages of verification. One is pre-disbursement appraisal. Next is sanctioning and documentation. Disbursement, review and monitoring. These are the 4 classic places where you have to verify that. Because as an audit, as a branch manager, he has to see all these items. As far as audit is concerned, they are only asking you whether the branch is doing all these 4 items in a proper manner or not. The last 2 items given is regarding renewal and enhancement. Renewal, once again, this goes to the 4 items. And the last one is classification of advances. Depending upon the verification, whether it is an SMS 0 or 1 or 2. That is what the last item is. But as far as stages of verification is concerned, these are the 4 stages as far as advances is concerned. And once you go through the 4th stage, you will end up classifying whether it is a standard or substandard assets, for which tomorrow Venugopal will be taking the class. Let us go through that in respect of each and every item. What do you mean by pre-disbursement appraisal? Very, very important. For any loans to be good, starting point is pre-disbursement appraisal. There was a WhatsApp message which has come. Vijay Mallya, fortunately we can publicly talk about him. The first stage we could not talk to him until he was found out as guilty. Vijay Mallya and one Sadhu who is scantily dressed, both of them went to a hotel. When they went into a hotel, Vijay Mallya was allowed to go and sit because he was with full coat, suit, etc. He was allowed to sit. This fakir, the counter fellow, was seeing him from the top to bottom, 2 times, 3 times every day. He was asking me, have you not seen any sadhu so far? What is that you are seeing? No, I am not seeing you for the sake of seeing you. I am seeing you to find out where you are having the money to pay me once you have some lunch here. Vijay Mallya from the other side was telling, if only one bank manager has asked me this question, I will not be in this particular situation. It is not that the bankers are not asked, bankers did not ask, wantedly they did not ask. Okay, so when the loan is being given, credit appraisal has key issue, that is the key issue. When a person comes, whether he has the intention to pay, capacity to pay, he deserves the loan. He deserves the loan or not. Sundararajan, if he is going to go and ask for a car loan of Rolls Royce, the branch manager should not give, because that is his status. Same Sundararajan can ask for a loan for Skoda or Maruti or whatever it is. They cannot ask for a Rolls Royce. I am just telling you a classic example. I don't know how many of you fall in the same rank, but I am just telling you. Probably all of you may be eligible for Rolls Royce. I am not saying for the sake. The point is whether they are eligible for that particular loan. For example, a surgeon is applying for establishing an operation theatre, full-fledged operation theatre. Yes, is he a surgeon of repute? Whether they will be able to get cases on their own, or normally they have been doing it only in another hospital. Suddenly, how will they get the people directly here? It's a big question. Advocate, whether he will be able to take a loan or not. Please understand, my dear friends, if there are advocates here or semi-advocates here, don't make me wrong. Bankers are seeing this advocates in a negative list. Not even for giving loan, even for giving credit card. I will have a classic example as far as my one very good friend of mine, Durai Pandyan, was a senior criminal advocate. He died recently, unfortunately. What he did is, he had taken a car loan. See, all these things are practical cases which are required to be discussed at a workshop. That's why I am telling you, because very, very important and interesting. He had taken a car loan. He has not been paying the EMIs regularly. The car loan people have given it for a recovery agent. That recovery agent is poor fellow, he did not know that he is an advocate. And more so, he is a criminal advocate. They did not know. The car was in the High Court. Car was the High Court premises. They came and seized the car and went out. They taken the car and gone away. The advocate is a very, very seasoned advocate. You know how people will be there. They have got the information immediately that he has taken. He went into the bank where he is having the regular bank account. And not the bank which has given the car loan. Car loan is given by a separate company. He went into the bank. He is having a locker operation also. He has created documents in such a way that he has operated locker in the morning at 10:15. The seizure was done by 11:30. He has drawn cash also, and the entry also he created the bank with sufficiently earlier. All these things were possible. Some 10 lakhs of cash and locker operation. Locker, whether it was there or not, that's a different issue, but jewels were there or not, it's a different issue. He completed it. What he said is, he did not know about this person. He is going to talk to him only subsequently by evening. Before that, he went to the police station and gave a complaint. My car is lost along with the cash of 10 lakh and huge amount of jewelry which was required for the purpose of taking to the marriage day after tomorrow. He had an invitation also enclosed along with it. 4 o'clock, a complaint has come. The seized person has come and came into the police station once again. He said he has given a criminal complaint saying that Mr. Durai Pandyan has failed, so we have taken the seizure of the vehicle. So please take action against him. The police said, oh, you are the person who has taken the car? We have a complaint received from Durai Pandyan like this. The person, the recovery agent, fell at the feet of advocate and gave the key and left. I am telling you, practically This has happened, some 15, 16 lakhs, they lost it. He said, before the police he was sitting, when he was sitting, see, he was telling to the inspector, sir, I understand, sir. Unfortunately, I didn't have sufficient money. I have not paid 3 installments, I know. That's why he has seized it. Thank you very much. I will pay the amount and take the car. Definitely, you take the car away. I don't mind. But please give that jewelry and he is requesting the inspector to take action. He said nothing doing that, it does not happen. Sir, locker, I have taken the locker, sir. See that? I have drawn the money, sir. You see that? You can ask the bank manager. He called the bank manager. The inspector called the bank manager. He said, yes, they have come, they have drawn the money, everything. This is the reason I am not telling. The person is very good, close friend of mine. Unfortunately, he is no more. I am not finding fault with him. The point is, they cannot be taken to task. That is the reason advocates are. Why I am telling about this is, when you do a credit appraisal, of course, the same thing is not applicable for king and parish. The same is not applicable in respect of just advocate Venugopal. It's not the same advocate Parasar. They have a standard. Okay. So when you go for a loan in respect of these sort of people, that's a different issue. King and parish are corporate advocates. You can definitely give money for the sanction. Why I am telling this is, when you give a loan, the credit appraisal has to be so strong that this account will not become bad at any point of time. For doing that, what is the branch manager should see? He has to take an application from the borrower. That is the starting point. There is nothing hard and wrong in explaining my own case. Please let us be very, very frank and clear that when I started the practice in 1989, obviously no bankers were willing to give you many loans straight away. So I have to go to my own creditors, loan creditors who are normally Marwadi. Here also I will have some Marwadi financial security there. They don't mind giving loan without security because they know, depend only on the personality. I asked for an amount of 50,000 loan and they also agreed to give loan for the purpose of acquiring a couple of computers. At that time, one computer is costing around 45,000 rupees at that time. I wanted to buy 2 computers, I will put some margin. What has happened is that the financier, his name is Lalit Kumar, very good friend of mine. Even today I am a very good friend of mine. I have given him a lot of business subsequently, not myself. First 2 stages, 2 years only I took money from him. After that he has been doing on his own. Today also he is a very good friend of mine. I respect him a great. He said, I will get the check tomorrow to your office, don't worry, I will come. No, sir, you don't have to come, I will come and tell you, don't bother. No, I will come here. I have to give you money. You are a big auditor, you are going to become big. I want to come and give the check to you. He came the next day, morning around 10:30 he came. He was sitting with me, he was having the check. He was speaking to me, asking me to order for a cup of coffee. 2, 3 people came and went all these things in exam, and after 1.5 hours he gave the check and said, my best wishes to you. I am sure that in the next 20-30 years you will be a big auditor, and he went off. I did all these things. My partner gave the hint saying that he was assessing you, you are doing a credit appraisal. How do you know that? When such and such person came and went, who was also known to the particular financier, he went along with him, no? He shook hands and went along with him. He was speaking to him for 5 minutes in the outside and then he came back once again. I am telling you, that is the best credit appraisal which can happen at any point in time. That is not possible in respect of a banking finance law, but at the same time, have the bank applied their mind on the eligibility of the particular person facility, whether he is eligible for the facility. The same thing has been filled up in the application form, whether he has provided the information regarding what is the purpose of the loan, how he is going to utilize it, how he is going to return it, for returning it, what is the generation which is going to happen, what is his present business activity, whether he is having a turnover of 5 crores or 2 crores or 1 crore as the case may be, how much he is applying for a loan, whether he is eligible for that loan, and once he gets the loan, whether he will be utilizing the funds for that particular purpose, he will operate that and give it. Take it as a term loan. He is not having a loan at all so far, he is having only a current account, he comes and applies for a term loan for a purchase of a machinery. Whether he can utilize that machinery at all, if machinery is borrowed now, bought now only, how he has been doing so far? So he has been doing with a subcontractor earlier. I am talking about a small conversion concept. He has been doing with a subcontractor. So now he is going to install a machinery. Okay. if he's going to install a machinery, whether he will be able to utilize the machinery. Of course, class is not from outside, no? I can tell you from that. Whether the machinery can be utilized by him, is he having the capacity to do it, first of all? If he is not having the capacity, is he having the capacity to recruit people for doing that? Yes. Then, if the machinery is used, how much he will be able to supply to other people, and because of what, how much he is going to save. And the saving will be reflected in the projections. What happens? He has been showing a turnover of 1 crore, out of which some 30 lakhs has been going for the job worker charges, and 40 lakhs was going for his salaries and other expenses, and another 10 lakhs for taxes, and 20 lakhs was shown as profit. Now, because of this, he is going to reduce this 40 lakhs of subcontractor job charges to the extent of only 20 lakhs by way of consumables. So there will be a saving of 20 lakhs. This 20 lakhs is going to utilize it for repaying the loan. Whether it is possible, yes or no. Yes means you can give for a loan. No means you can be given for a loan. So where will it be given? It will be given in the application form. In the application form, there will be an attachment for the past financials as well as projected financials. Whether the projected financials are reasonable when compared with the past financials. Because last year I was having a turnover of 1 crore. Next year I should not have a turnover of 100 crores. I can go for 1.5 crores, 2 crores. But I cannot for 100 crores. Yes or no? KYC compliance. At the time of receiving the application, KYC compliance is very, very important. Whether this customer is known to you, if he is known to you, complete the KYC. If he is not known to you, he is a fresh person coming from another bank. Take the introduction letter from there. KYC is very, very important. That's a separate question in long-form report regarding KYC and AML. Whether the KYC of the borrower has been verified. Timely preparation of the proposal for grant. Application is received. They have given all this information, but the same information has to be converted into the bankable format. Bank should have a format of CMA format as far as working capital is concerned. They should have the standard format for verification. Have they filled it up there? On the basis of that, have they been able to ascertain the MPBF, maximum permissible bank finance? Have they been able to get it? On that basis, whether the loan can be granted or not. Whether the branch manager has done this. Whether the branch manager has taken the application form. Whether the branch manager has done the KYC. Whether the branch manager has prepared the proposal of granting loan in a proper manner. After considering the due appraisal of the data. What is the due appraisal of the data? He has given the past records, he has given the future projections. As far as the past records are concerned, has he examined the audited financial statements? Apart from the audited financial statement, has he also examined the income tax return? Has he filed the GST return now? Previously it was state GST return or KGST return as the case may be. Whether that return and this return is matching. They have given a stock statement, whether the stock statement is matching with the 31st March financial statement which is given. And once you go to the projection, whether this projection is achievable or not. All these things has to be examined by the branch manager. Has he done this? This is what the question which he is asking. Past dealings with or of the borrower. What do you mean by that? Past dealings with the borrower, if the borrower is with your own company, with your own bank. He is an existing customer. Past dealings with the borrower, whether there are sufficient checks returns were there. If the check returns are there, why it was there? Whether the current account was decently operated, is there any negative issues which are there? Past dealings of the borrower. If the borrower is coming from another branch, past dealings of the borrower has to be taken as a confidential report from the other bank, whether it has been taken. Whether authorization is there, board resolution or partnership resolution as the case may be. Please understand, as far as corporate loans are concerned, board resolution is compulsory. And whenever it is a public company, 293 earlier section, now it is 184, that loan sanction has to be there, that is AGM sanction has to be there. In case of non-corporate borrower, the partnership deed should authorize the partners to borrow, and it has to authorize who is the partner to sign the documents. If that is not there, you are bound to have a problem. For that purpose, you have to determine whether the partnership deed has been amended or not. All these things are supposed to be done by the branch manager. Financial statements and tax statements, visit report, very, very important. As I was telling you about this Marwadi, visit report. You has to go and visit the branch, visit the unit, whether it is functional or not. If it is not functional, one of the LFAR question is there, whether the units are functioning at that place or not. We are supposed to report. How do you go and report? I don't know. Credit reports wherever it is a takeover cases. And it is not the branch alone is giving the loan. Zonal officer or regional officer also giving the loan. In those cases, the branch is supposed to prepare the appraisal note and send it. Because the head office or zonal office people depend only on the appraisal note and give the loan. When the loan becomes wrong, they will say that after this branch manager has given an appraisal note which was looking good, so I gave it. So we are supposed to determine whether the appraisal note is properly done or not. And whether the projections are realistic. I already explained to you. Net worth of the borrower, NOC from existing borrower, adequacy of the security. Because I have to have a fallback. Once the loan is given, I have to have a fallback. If the loan is not properly given, what is the fallback which is available? And the ratios are satisfactory. In case of working capital loan, I will have the current ratio and quick ratio. In case of term loan, I will have to go for the DSCR. And also debt equity ratio, whether it is all these ratios are covered. These are only 4 key ratios, but other than that there are lots of ratios. Fixed asset turnover ratios, the net profitability ratio has to be there. Any business which is having a less than 2% net profit, no relevance. I should not give. Even though they are doing it for tax planning, how do you know that they will not do it at the same level subsequently? Already the net profit is 2 or 3%. Once an interest on bank loan comes, it will go further down to minus 2.5%. No purpose. Please go through all the items and then examine. The point is, we are not supposed to do the credit appraisal. Please make it very, very clear. We are supposed to verify whether the branch manager has done the credit appraisal in a proper manner, and if they have not done, we are supposed to report it. Once again, the bank manager comes and says, sir, why are you going like and seeing like an inspection auditor, sir? Previously it can be said, but now it is not there because they are asking a specific question. And these are the questions asked in the long form report. The earlier what I was talking about is various examples. Now let us go to the specific questions that have been asked in the long form report. Has the branch generally complied with the procedures, instructions of the controlling authorities of the bank? What in your opinion are the major shortcomings in the credit appraisal? So we have to necessarily answer. The projections have not been properly verified. Inspection has not been done by the branch manager at the time of before sanction. The branch manager has not gone through the financial statements. It is not comparable. If it has been done properly, you don't have to give it. There is no compulsion that you have to give a negative report only. But wherever there are major shortcomings in the credit appraisal, you are supposed to report. Have you come across cases of quick mortality in accounts? What do you mean by quick mortality? I hope all of you have heard this earlier also. Any loan which is becoming NPA within 1 year of sanction is called as quick mortality account. Why this question is coming in credit appraisal? All of you can think. Quick mortality, NPA, just to come in the classification of loans. Why it is coming in the credit appraisal?
Old past loans?
No, past loans okay. Why it is coming in the credit appraisal area? Yes, past. It is in respect of past loans only, no doubt. Why is it coming in the credit appraisal?
To verify whether the manager has done his job correctly.
Beautiful. If a loan is becoming bad within 1 year, obviously it does mean that credit appraisal is not proper. If a loan is given in the month of April 2022 and it becomes an NPA in the month of February 2023, which is an audit of your own year, you have to specifically mention about this in the credit appraisal note also. Not only that, a loan which is given in the previous year of 21-22, if it becomes an NPA also, then also you have to give a report in 2 places. One is on the credit appraisal area and another is on the quick mortality account. So please understand, credit appraisal is a key area which is critical as far as advances are concerned. The third question is whether in borrowed account the applicable rate of interest is correctly fed into the system. Correctly fed into the system. This is a new question which has been added. Correctly fed into the system. What does it mean? Whenever the loan is being given, interest is given as linked to the BPLR. In a housing loan is given at 2.5% less than BPLR. In case of CC account, 2.5% above BPLR. So when it is entered into the system, it should be entered as BPLR plus or BPLR minus as the case may be. You should not fill up 7.5 or 11.5 as the case may be. Am I clear?
How come it is the appraisal?
That's a very important, very beautiful which has been in the sanction letter, but it has come here because at the time of sanction itself they have wanted to determine the interest rate. That's why they have brought it here. At the time of sanctioning, they are proposing and recommending, no? At that time itself, feeding into the system has to come subsequently, but it has brought it here.
What is in the application when selecting that pop-up? That's the thing what they are trying to ask?
Maybe possible, because online applications are asking for that.
Banks are online.
Then once it is approved, it automatically go into the system. Whether then on the review side, interest is reviewed periodically. Have you come across frequent rollover or renewal? Frequent rollover or renewal of short-term limits. For example, a person is having a limit of 10 lakh. Very frequently he comes and asks for 1 lakh TOD, gives a loan, that will be closed. Once again another 1 lakh. What happens is, up to 10% of the limit, the branch manager is authorized to give TODs. Branch manager is authorized to give TODs to the extent of 10%. Just because he is eligible for 10%, you cannot give a 10% advance for the throughout the year. Which means this itself is a potential case of sickness. The reason why I am telling this is, normally when they give a loan, the branch manager limit will be 10 lakhs. So they will ask you to apply for a 10 lakh loan and keep on giving you accommodation in a periodic manner. Once you give an periodical accommodation, there is every possibility this account become a sickness at some point of time. That they have brought into the question now itself, saying that by way of short-term loans are they giving regularly to this particular by way of a rollover. And whether the correct and valid credit rating is filled up in case of corporate loans. CRISIL and ICRA ratings, whether it is being given. In credit appraisal, one item which I have missed out is CIBIL rating. Whether the CIBIL rating has been obtained by the branch management in a proper manner or not. CIBIL rating beyond 750 is acceptable as it is. But whether there is a compulsion, it is not compulsion. Less than 750 also they can give. Only thing is, the branch manager has to record the reasons why he is giving the loan in spite of this CIBIL limit. How his balance have come. So I understand it's a coffee type. So CIBIL rating is an important item as far as credit appraisal is concerned, because less than 750, it has to be looked at. Why it has to be looked at? The reasons why the CIBIL rating has gone down. If it has been because of frequent check returns, if it has been because of frequent defaults in the term loan accounts, if it is because of default in some other CC account or some other loan account or some other housing loan account, or in respect of cases where it is given as a guarantee, that has to be examined by the branch manager and recorded. But please understand, CIBIL is not having any sanctificator, because the reason is CIBIL is a private organization. I don't know why it is given such a big importance, and they also advertise it is a joint initiative of Reserve Bank of India, something like that. They are given in the letter in the website, which is not the case. It was started by SBI and HDFC at some point of time. Now they are not no more the shares have been sold, and it is only a foreign company. But still, they are insisting on CIBIL because there is no alternate remedy available. Because there are one person who is having the information. If the name of Sundararajan, the PAN number is put on the CIBIL report, you will get what are all the loans. It gives us a horoscope. What are all the loans which I have taken from day 1 to day, it will come. That is the only place where it is. So in that situation, same way in the case of CRISIL rating and ICRA rating, please check up whether proper rating has been obtained. I will not be able to say whether it is a correct rating because we are not experts on that area. You can have a disclaimer in that area, but wherever rating has been obtained, whether that rating AAA plus or AA plus or D, whatever it is, has been verified upon. The next question is on sanctioning documentation. I think you will sanction the time for a cup of coffee. Thank you very much. So the second situation is regarding sanctioning and documentation. So the questions comes on the next slide. That is talk on the issues literally. Whether the sanctions are within the delegated powers is very, very important. Without that, it's going to be a serious issue because it's a violation of the branch's power itself. Disbursement shall be in line with the terms of the sanction. What does it mean? When the sanction letter says the money can be disbursed only under this stage. If it's a housing loan, it will be disbursed only on the verification by way of an architect and getting a certificate. One issue. The first disbursement will happen only after the basement is completed. Next issue. Next disbursement will happen only after 3 months after the certification by the approved architect. Like that, there will be some terms in the sanction. In respect of term loans of business purposes also, once the order is given, it will be given along with the advance money paid by the borrower. There will be some letter of credit which will be opened or guarantee which will be opened. Once the production of manufacturing activity happens, there is a stages of payment which has been given as far as the missionaries are concerned. According to that, it has to be paid, and each and every amount situation paid, there should be a proper verification. This should be part of the sanction. On the basis of the complaints, it can be paid. Second possibility, if a term loan for plant and machinery is given for an amount of 1 crore, there is a margin money which has to be given by way of 40 lakhs by the borrower. So at the time of first disbursement, he will pay 10 lakh. Along with that, I will pay 25 lakhs. Both put together, I will send 35 lakhs to the borrower. So each and every situation, his margin has to be brought in, and the money has to be added along with this and given us. For which, once again, whether the money has been brought in by his own sources, by way of capital, etc., if the situation is like that, whether an auditor certificate has been obtained. So basically, in this situation, what is the sanction? Whether the documentation happens according to the sanction. All charges are collected, both any charges for that matter has to be collected. Execute the documents as provided in the sanction letter. Sanction letter will mention around 20 documents to be answered. All the 20 documents has to be obtained. Invariably, almost all the banks have a standardization by way of taking a legal opinion after the documents are executed. Whether all the documents has been completed, there is a letter which has been taken from the advocate. If that letter is required, whether that letter has been obtained. ICICI Guidance Note also gives a detailed checklist. We did not have to bother about that because sanction decree is of the paramount importance. Whenever there is a deficiency in respect of the document, maybe this pronote has not been taken, this term loan agreement has not been taken, hypothecation document is not filled up properly, the details are not filled up properly. See, in fact, in December 2015, there was a circular given by Reserve Bank of India which, should all possibility, will be discussed tomorrow in the IRAC norms. In the December 2015 circular, what Reserve Bank of India has said is, each and every loan document has to get filled up the details in respect of each and every aspect of the repayment, including the exact date of repayment. Exact date of repayment. Normally, what happens in case of housing loans or principal loans, this repayment starts from May 2022. That's how generally it has been accepted. But now, Reserve Bank of India in this December 2015 circular, they made it very, very clear. In case he misses out tomorrow, you can ask him, sir, there is some circular which has been issued in the month of December 2015, kindly explain that. There are 6 conditions which has been given in that particular circular. One of the conditions is this: the documentation has to be filled up with in respect of exact dates of due dates, exact dates of EMIs, exact dates of number of installments, and when is the last payment. All these things has to be mentioned in the document. So whether that has been filled up or not. So day before yesterday was having a session in Kottayam where they asked, sir, documents are not filled up at all, sir, what do we do? You give a report. Documents are not filled up. I always tell to the people that this is one client whom you will not see in the next 1 week, after 1 week, you would not have seen before 1 week. Before 1 week, you will not know that he is our client. Go to a person called Karpaya, in particular branch manager, that person you would not have seen 1 week before and you will never see in your lifetime next after 1 week. In fact, after 1 week, if you see, he will show the face and go away. He will not like to see you. So, no personal, it has to be very, very clear. If it has to be observed, it will be observed.
But in most of the cases now is an automatic, the risk is very less.
What is it?
So most of
fine. All these things are happening now, sir. But the problem is, it is all garbage in, garbage out. The person who is creating the document should enter the date exactly. If you once again he doesn't tell the date exactly, it will print out what is being given only. So when you take the documents, please ensure that the documents are having all details in completeness. Only in respect of the loan sanction examined by you. You don't have to see all the documents. In respect of documents examined by you. That is one advantage we have as far as statutory branch auditors are concerned. In respect of loans examined by you, whether you are doing it. I always tell about this to all the people. You can't avoid any segment of loans. You cannot avoid any segment of loans. Even the smallest of the loans also are to go. Why? Not before 2021. Before 2021, you can ignore loan on deposits. You don't have to verify it out. You can ignore small consumer durable loans. Thought 10,000 rupees, 12,000 rupees, you can ignore. But no, you cannot ignore. Why? There is a question in long format report. In respect of other advances, please comment whether the system of all these things have been properly followed or not. If you have to say that in respect of loan and deposit systems have been followed, should you not examine at least one item? So you can't skip any loan, personal loan, salary loan, unsecured loan, staff loan, all the loans you have to see at least one or two examples. You don't have to see a lot of examples, at least one or two examples to examine whether the system is followed or not. So when you go through, that is in fact in the LFA, one question is how many advances you have verified, what is the percentage of advances verified, we are supposed to fill up now. Previously that was not there. Now from last year we are supposed to give that. Once that happens, each and every segment of advances you should have verified at least one item, two item. It is for you to decide one is sufficient. It is for you to decide one is sufficient because there are 10 number of loans which each item is 15,000 rupees only. I don't know, that is TV loans. Let us assume for a moment TV loans, 25,000 to 30,000 rupees is the consumer case loans. I don't want to see that because it does not have any relevance. But at least one item you have to see for ascertaining whether the system is there or not. Ensure lien is marked in deposit. Mostly lien is marked in the system only. Please examine in respect of the loan and deposit verified by you whether the lien is marked or not. If the lien is not marked, you have to ask them to mark and take photo shot of non-lien marking for your documentation. Because if you go and say, of course, whenever they mark the document, the date swapping will happen. But when it is there, not as marked, take that screenshot for your documentation and give a report. Ask them to rectify it. Verify the margin money is brought by the borrower is important. Charge created with ROC. Wherever corporate loans are concerned, please ensure that the charge is created. In fact, you have to understand, just because the charge is not created, whether loan is secured or unsecured. It's a very, very big $1,000,000 question. As far as corporates are concerned, unless and otherwise the charge is created with the register of companies, the lender is considered as an unsecured creditor when? At the time of liquidation. At the time of liquidation, he ranks on par with unsecured creditors. For that matter, can you say that the loan is unsecured loan? Because you have a mortgage of the property. For example, the company has the building in its name, they mortgage the property. EM is created. In that situation, it's absolutely a secured loan only. But at the same time, technically it's an unsecured loan. As far as we are concerned, they are asking a clear question whether the charges which are to be created in respect of corporate loans have been created or not. If it is not created, please give it.
Insolvency proceedings will be treated as unsecured.
The next important item in case of corporate loans is vehicle loans. See, what happens is the banks are not willing to file the form. Reason being, sir, after all, my name is endorsed in the RC book, what more do you require? It is as good as a pledge. Obviously, I hope all of you know, pledge of property need not go for a registration charge, pledge, including loan on deposits. So, what you are saying is, this is a classic example that in vehicle endorsement is, they don't have to go for the registration charge. Once again, I tell you, technically as far as you are concerned, if it is not done, not done. The question is simple. Whether charges required to be created in respect of ROC has not expanded, that is, MCA has not given an exception that vehicle, they have not given an exception. As long as that exception is not given, you are bound to give it. Please understand, this format filing has become technically too difficult nowadays. Previously, up to 1 year it was possible with the delayed payment, etc. And subsequently we can go for NCT, etc. Now it is not possible. Equally important is, whenever a loan is settled, satisfaction of charge has to be registered. If it is not registered, you will not be able to settle the satisfaction of charge at all. And whenever a loan is given to the corporate office, as part of the credit appraisal mechanism, you should ask for a such report, which I did not mention in the earlier occasion. Whenever a corporate loan is there, such report has to be examined to examine whether any other loans are there or not. So all these documents has to be obtained. These are all questions which are available. But once again, respect to housing loans and vehicle loans, disbursement has to happen directly to the builder or the vehicle supplier. I will share a classic example in this vehicle supplier matter. It was a fraud. I happened to be the concurrent auditor of a particular Bank of India branch where the vehicle loan was given for registration in Pondicherry. Pondicherry, you know, it's a neighborhood of city of Chennai, where taxes are lesser, road taxes are lesser, so people go and take delivery in Pondicherry. Normally what happens is this manager is a very, very seasoned manager, scale 2 manager, is a Brahmin only, known to me very closely. Normally he is very, very clear, he puts clear DD, etc., covering letter, everything he puts in a sealed cover and ensures he delivers to the Pondicherry branch to go and deliver at the RTO office. That's how he normally does whenever Pondicherry registration happens. That day when he woke up in the morning, probably he did not see the newspaper. Probably against his star, there should have been a Chandra Shavam. So he did not see that. He has given the deed to the borrower, along with the covering letter to the company. Let us say Kivaraj Motors. They have given to Kivaraj Motors saying that please take this DD and ensure that the property is registered with the endorsement in our favor. Yes, so removed the covering letter and he went and gave the DD, took the vehicle and went and disposed of the vehicle. We saw the first month audit. We said that loan has been given. That was given somewhere on the 23rd or 24th of every month. So we gave that disbursement has been made directly to the this person, but stamped receipt is not available from the this thing, and also invoice has not yet received first month. Second month also we gave the same report. Second month we said it is the form of continuity report. Third month we said it is a serious issue, does not happen. We said that we are going to give it the serious report. At that time, the officer woke up and went and examined with the registrar, with his Pondicherry registrar. They said that no hypercation has been done. In fact, the vehicle has already been transferred, sold off, 7.5 lakhs gone. We had to give that report in the second month by way of a fraud. And fortunately, we have given in the earlier 2 months reports also regarding the documentation not yet completed. The manager was suspended, put on inquiry for a couple of months, and then made good. The loan was recovered by way of forcible inquiry. They got it, but the problem is he went out with a black mark only. How do we examine this? That is what is important. Please understand, the sanction terms are very, very clear. Disbursement has to happen like this only, and the letter has to be sent to the RTO like this only. Ensure the registration happens and they get the certificate immediately. If you don't do that, you violate the smallest of the smallest manner, you are bound to have a problem. So please ensure in respect of vehicle loans has to be as careful as possible, and more careful in respect of machinery loans, because machinery loans invariably the margin is jacked up in the invoice value or pro forma invoice value. You might not be able to ascertain really it is there or not, but wherever it happens, if you get an input by way of somehow or other, because obviously the margin money he would not have paid through you, you will be giving a standard receipt that the money has already been paid. If it has been cash received, it should not have been brought up to the books at all. How it is going to happen? Once again, take the certificate of the auditor to have brought it by way of margin money, and then you will have to satisfy yourself. By the next year, when you do a review, you have to ascertain whether the margin money has been brought to the books or not. Otherwise, once again, a bulb has to blow on your head and you have to go for early warning signals. These are the questions as far as LFIR is concerned. Credit facilities sanctioned, whether there are any credit facilities which have been sanctioned beyond the delegated authority or limit. This can happen in multiple areas, basically by way of ad hoc sanctions, basically new loans, whatever it is, this can happen. In one particular branch, what has happened is, he was forced to achieve targets. In the over enthusiasm, what he did is he went to an educational institution asking all the people to apply for a loan of 1 lakh, because 1 lakh was within this parameter. That is called as, in syndicate bank, there is a loan called unsecured personal loan, per segment loan. It's called as per segment loan. No document, nothing will be asked. You can give a declaration and say it's an unsecured loan only. They have gone to education institution. That education institution owner also was very happy. He is going to get an amount of 50 lakhs or 60 lakhs as a lump sum amount. So he identified all the employees. For Sundararajan, Divya was a character. For Divya, Manju was a character. For Manju, Sundararajan was a character. There was 50-60 loans has been given. He has achieved the target, which was given in the month of February. When I did the audit in the month of April, I got a small hiccup, saying that how suddenly so much of loan increase was there, because that was December and that was summer, there was a huge jump. It was a small batch actually. I talked about 15 years back when I was on scale 3. I got the smaller batch. At that time, we couldn't repay that. I asked him how, said this has happened like this. We went through documents. We found out that this happened. It looks like a one. And ultimately, when we went into the SB account, when the loan was given, the next moment the loan has gone to the society. And the society loan, that education society loan, was already under NPA. The society loan was under NPA. Because of this money, that NPA has become performing asset. He has come regularly and has paid. I made as a remark in the law form department 2 places. One is on window dressing. Second is in respect of the loan disbursement also. The disbursement, induced, we cannot talk about that because the induced need not be given, it's only a declaration. But only thing is, there is a possibility of default because the money has been circulated and given under that law.
So
I'm informed that after 2 years, that particular person has been retired. After 2 years, at least 10 of the borrowers have not paid the money because the management was paying them the money and they were paying. 10 people did not pay that money directly to the banker. Management is under the impression that money is being paid, but the money was not paid. Then the Apollo accounts became NPA.
So in those cases, NDUs, what we are talking about, for example, they use the money they have taken from the syndicate bank, they usually use it to say real estate and some other share market. Is it on part of the audit, is it required to verify the NDUs or not?
Only you don't have to because a particular sanction itself, NDUs need not be verified. There is no requirement of NDUs verification.
But term loan it requires. Mortgage loan it requires.
Mortgage loan it requires. See here, it says it's basically a per segment loan. No questions will be asked. Sanction itself is like this. Up to 1 lakh. It's not beyond 1 lakh. Up to 1 lakh.
Syndicate bank approval.
1 lakh. No, you can give a declaration. I am going to buy furniture, TV for our house. That's our one declaration.
We draw the attention in the LFR. Saying that because they are going to use for the real estate and.
See, 1 lakh, if they use in real estate, nothing will happen nowadays. That's the only advantage. But still.
No, RV the sensitive transactions for
but you don't have to bother because why sensitive sectors loans should not be given? Because volatility will happen. In case of this 1 lakh unsecured loan, when we give the loan itself, we are not sure whether it is going to recover or not. This is almost a dangerous thing only. And moreover, 1 lakh into 100 people, then only an amount of 1 crore will come. So, if this is going to be misused like this, circuited, rotated, you are able to identify. I got a suspicion, I went into that. If you don't get a suspicion, you may not be able to detect it. How do you get a suspicion? How do you get a suspicion? Probably youngsters here can tell. How do you get a suspicion? How do you get a suspicion? Concept of professional skepticism. Institute, this Code of Ethics 2019 has also talked at length about this professional skepticism. See, whenever you are seeing a particular account, and leave all of this, even in case of your own private limited company operations also you can understand. First 3 quarters there will not be any turnover, 4th quarter suddenly huge turnover jump will happen. Professional skepticism should come into play. Same way in case of banking sector also, if you suddenly see a jump in respect of loan or see a jump in the sort of recovery, all this recovery, window dressing can happen. Instead of giving a loan to you, I can give a loan to you, somebody known to you. From that the money can be brought in so that this LP also will become clear that new loan also will be given. I have an example of that. For such cases wherever the credit limit is given beyond the limit, is it being promptly reported? There is a standard reporting format which is there. Branch will have a format of the report, but they would not have sent it at all. They will be keeping it in the RO file.
how it is being reported. Nowadays emailing is required, accepted, so whether the email has been given or not. Just by seeing the paper, keeping it here is not sufficient. Reporting has to be done online. Advances disbursed without completing the terms and conditions. There may be so many terms and conditions. It can be terms and conditions can also include, like what I was talking about, to a car loan, you have to come and give the vehicle, then only I will give the second installment of payment. In case of missionaries, first installment can be paid, second installment will be paid only after you get a receipt from them, along with the confirmation the mission has started to be installed and mechanical engineer certificate is being obtained. Then only I will give the second disbursement. So if there is a terms and conditions like that, you have to ensure whether the terms and conditions have been properly followed or not. There is one question which has been asked, whether the bank is in the nature of providing loans to companies for buyback of its own shares and securities. There is a question which is available. This will not happen in case of small and medium branches, but larger branches there is a possibility. The reason is, as the gentleman was telling, it is basically because a bank should not fund to a corporate for buying their own shares and securities. It is prohibited. So, is the bank giving money for that? They can give loan for other natures. They may be utilizing for buying of shares and securities. What happens is, whenever buyback of shares and securities is given, they are supposed to take no objection from the bank. If they have not taken no objection from the bank itself, is a very big question why they have not taken. In that situation, you give a separate loan for them. That loan money is utilized for buyback of shares. It is not allowed. You have to give it in the form of a non-formality report. As far as documentation is concerned, what are the questions which are being asked? Credit facility is released by the bank without execution of necessary documents. Very, very serious issue, because what happens is, in case of particularly housing loans, etc., tripartite document has to be signed, only then the loan can be disbursed. First loan can be disbursed. EM has to be registered, then only the loan can be disbursed. There are lots of conditions like that. If the conditions are not executed and credit facilities are given, disbursement is being made, you are bound to give this letter in reply in the case of a non-formality. Of course, deficiency in the external documentation, there is a standard question which is earlier also available. Wherever deficiency is there, including non-registration of charges, we are supposed to give it for. Lien on deposits I have already explained. Whenever a loan is given without granting money, it's a problem. The next item is review, monitoring and supervision. Very, very significant stage after the credit appraisal, because documentation also not major issue. Even if the document is not available, the bank can fight it. Because disbursement has gone into their account, they have utilized the money, all these proofs are available. But if there is no credit appraisal, it's going to be a serious issue. The next issue is review and monitoring and supervision. Whether the branch is following the review, monitoring, supervision in a proper manner or not. So whenever a loan is given on the basis of a particular security, whether the security is continuously available for us at all. Sir, generally security will not go away anywhere, sir. No. Nowadays what happens is, they give a security on the main road of, let us say for example, for your understanding I will see you, on Majestic Circle they give a property by way of a loan. Next 2 years, there is a metro project expansion happens. The building will go. Compensation will go to that fellow. He would have taken the money. He would have given as collateral security for his brother's borrowing. There is every possibility that even though the bank, government will ask for the documents, etc., that's a separate issue. I am not coming into the picture for that time being. There is every possibility the compensation will be given, that he has to come and pay up, make all the payment. But the reality is, there is every possibility at some point in time the property can go out also. In Tamil film, one standard joke is that Vadivelu, one comedian, takes a loan for digging a well. No bill will be there, because he will get a certificate from the Tahsildar, because he is at home. Hey, for coming and verifying the bill, I will come on, get the letter, I will sign, he will sign. And the next person, engineer, he will also sign blankly. They go and give the loan. 1 lakh is the loan, 40,000 rupees he gives us dose to all these people, only 60,000 he gets. He gets a notice from the bank. At some point or other, he is not paying. He takes all these certificates and says, he goes and gives a police complaint. Like Dorai Pandian, he goes and gives a police complaint saying that, sir, I have taken a bill, bill is gone. Bill is lost. Inspector scratches his head, bill is lost. Yes, sir. You come, you have to place. Okay, he comes, says, shows the place. Sir, here is also a well. This well was giving water to the entire community here. King had my well was there, sir, now it is lost. This well is there, Tahsildar has given a certificate, king has given a certificate. There is a payment which has been made for which your bank manager has given an approval. Property is gone. So the property loss and security loss is almost available in all the cases. The same thing has happened in respect of Nirav Modi case also. Same thing has happened in case of Vijay Mallya's case also. Vijay Mallya, there was no security at all. The loan was given sheerly on basis of corporate guarantee, whereas the corporate itself was not there.
Brand.
Pardon?
Brand.
Brand. What is the value of the brand? There is one question in long form report now, whether intangibles are funded. See, wherever they are not able to find any solution, they come to the auditors. We have become what you call soothsayers. We call it as soothsayers. We are able to examine. Questions that I will come to that interesting. Periodic review of operations. Whether the branch manager is periodically reviewing the operation of the particular borrower or not. Parallel in case of business loan. As far as business loan is concerned, we have to necessarily go and verify whether they are operating or not. If they are not, if they are operating, whether they are operating at the level at which they have given the assurance, then that is there. If it is not there, it is going to be a serious issue. Justify the end use, particularly in case of education loans, the money has to go to the respective education institution. You should be able to get the registration. He has to give the hall ticket in the first year, as if he has written the examination. Only after you write the examination, pass out, second year's fees can be paid. Third year can be paid only after getting the second year result. All these things is manager's responsibility. Whether the manager is following the responsibility, we are supposed to do a settlement. Prompt reporting, wherever these issues are not properly done, whether the branch is immediately promptly reporting. The exchange of information, particularly in respect of consortium branches, wherever consortium advances are given. I hope all of you know about consortium advances. There is one leader and there will be so many members. Previously, a situation is that in case of a consortium, definitely funding itself will happen only after the consortium meeting happens. Nowadays, it has gone. What has happened is each individual person is having their own, each and every bank is a princely state. One emperor will be there. And the emperor will be having only to the extent of largest exposure. That's all, and nothing more than that. But even in that situation, the exchange of information has to happen. Whether there is a turnover sufficiently available, whether the transaction is being routed to them properly, what's the total accumulation of credits in all the banks put together, whether it is matching with the turnover which has been projected. Because a single borrower, single bank, no problem. When it is multiple banks and same borrower, definitely is going to be an issue. So exchange of information on consortium is required. Then you have working capital. All the working capital has to be renewed every year. There is no second thought at all. Renewals has to happen because the loan is given only for 1 year. Except on very few cases where working capital is given for 2 years. There are a few cases where working capital loan is given for 2 years. There are also cases where working capital loan is given on the basis of security at 60% of the advances, where there is no renewal at all. Renewal happens only in 3 years. Being part of the sanction. If the sanction itself is like that, you don't have to bother. But otherwise, working capital or why working capital loan is given for 1 year? That is the next question. Business. Effectively business, and it is liquid, and its funding is only on the liquid assets. If the operations are not periodically monitored on a regular basis, it can go wrong. Whereas in case of a term loan, loan is going to be given for a machinery, or going to be given for a house, or going to be given for an education, which is a long-term purpose. The purpose is seen. Whereas in case of a working capital loan, the loan is given for a temporary purpose, for the purpose of managing the tiding away of the working capital requirement of the party. Working capital always vanishes. Working capital always vanishes quickly. And any security which is going to vanish quickly, it has to be periodically monitored. That is the reason they have given us as low as 1 year. Every year renewal has to happen. Because when you do the renewal, you are bound to have once again a credit appraisal, once again a physical inspection, once again a visit to the party, once again examining whether this information is being given. And please understand, my dear friends, after the last year LFR correction, renewal can happen only on the basis of audited financial statements. Previously, provisional financial statements will be given and the renewal can happen
From last year onwards, renewal can happen only on the basis of latest audited financial statements. Otherwise, we are supposed to report. Immediate question. Sir, what will happen in case you are coming and renewing in the month of June? Possible. So once they come for the month of June, you can ask for the provision financial statements certificate. But the same party, they would have done in the month of June 22 renewal, you are doing the audit in the month of April. You can ask for the audited financial statements on March 22. Compare that with the provisional, which should have been done by the branch manager once again. So the question is, wherever loans are given and renewals are given, if it is done without obtaining the latest audited financial statement, please report. That's what I say, no? They have given all the responsibility to auditors.
So SOD can be 3 years, like that terms can still.
Yeah. Terms can be SOD is property.
It's been aligned to stocks and debtors. In that scenario also can go.
Yeah. See, once again, sanction terms should be very, very clear. If the sanction terms is like this, there is no problem. Vartaga Mitra, there is a scheme on Karur Vysya Bank. If you have done the audit of Karur Vysya Bank, there is an agreement called Vartaga Mitra. Vartaga Mitra, it's a user merchant friendly. They don't ask any documents, don't securities, etc. Only thing is every balance income tax return only has to be given. The loan is given on 60% of the property. That's all. No other questions. Every year they have to give the financial statements. So depending on the terms and conditions of the sanction, we don't have to bother. Periodically obtain the financial statements, stock statements, MIS, QS, and compare with the projection statement. What will be the projections that they have given? Have they been comparing that with that or not? Intelligent scrutiny of bank statement. Very, very important. I was telling you in the morning also, the first session also. Whenever the bank accounts have credits and debits, it has to be periodically monitored. Why it has to be monitored? Credits should be sufficient at least to the extent of turnover which I have projected, number one. Debits should be going to the end use in a proper manner. In case of a partnership firm, the money should not go to the current account of the respective partners or savings account of the partners. If it is going regularly, there is something going to be serious. If not today, someday it will happen. Invariably, please understand, my dear friends, that loans become bad, but not because of the inefficiency, it is because of diversion of funds. 90% of the loans becoming bad is happening only because of diversion of funds. So diversion of funds, how does it happen? It happens only through the bank account. If the bank account is intelligently monitored by the branch management, it will not happen. Comparison of the movement of stock and book debts. They will have a regular stock statement. All the month the loan stock statement will be showing in the same amount of 2 crores. That itself is wrong. Because there cannot be a standard stock permanently at all. It's a dynamic product. It's a dynamic product. And moreover, once they give a stock, they will have to give a stock list also, because the list will give you the information whether there are long outstanding stocks which is continuously there or not. It has to be verified with the branch manager. In the same manner, book debts. Book debts more than 3 months, it is not considered for the purpose of drawing power at all. In certain branches, it is 6 months. So wherever book debts are given, whether the same book debt is continuing or not, that is to be monitored by the branch management. And invariably, book debts getting certified by a chartered accountant, please ensure that the chartered certificate is obtained or not if it is required as per the sanction ticket. And as far as stock is concerned, unpaid stock, paid stock, depends on the bank's policy. Please examine whether any paid stocks are there and unpaid stocks are there. Maintenance of sufficient margin. Once again, it comes linked to the drawing power. So whenever a loan is given as against the proper stock to the extent of 75% and 50% margin for book debts, whether the margin is maintained properly and regularly. If it is not there, drawing power has to be changed, and once the drawing power is changed, it will become SMA 0, 1 or as the case may be 2. Ensure stock is not obsolete, unsaleable, long pending items, pending in this account continuously, definitely it is going to be serious issue. At some point of time, the security will get vanished. Physical verification of the security provided, as I already told you, even if you are given a loan for a well, you have to go and periodically verify whether the well is well or not. Whether well is well or unwell. Non-corporate entities with sanction limits above 25 lakhs. Earlier it was 10 lakhs. Many banks automatically voluntarily changed to 20 lakhs, 25 lakhs like that. Last year RBI itself has monitored as 25 lakhs. There is the link attached to this. Earlier the tax out limit was 40 lakhs. At that time they have said 1/4 of the turnover can be working capital back. So they gave us 10 lakhs. Now the tax out limit has increased to 1 crore. But now forget about this additional 2 crores limit, I'm not coming to the picture, basic exempt limit of 1 crore. So 25 lakhs, fair only. So whenever a non-corporate entity is there for having a working capital limit of more than 25 lakhs, whether the audited balance sheets are taken or not. I need to have a question here, definitely. So definitely people should have some question immediately in respect of non-corporate.
Audited compiled.
Compilation is not agreed. It has to be an audited financial. Compilation is a separate engagement. Compilation engagement is separate. Whatever you give, you just compile and give it. That is not acceptable. It is to be audited. Tandon Core Committee recommendation made it very, very clear. It has to be an audited financial statement and the audit report has to be true and value. The question which normally come from the members is what will happen in respect of presumptive taxation. 44AD and 44ADA. Unfortunately, once you are doing bank audit, you have to see income tax act also. Even though I don't have any income tax, but these two sections have gone to my mind so very well. 44AD and 44ADA. Yes, there is a stipulation in the income tax saying that you don't have to show books of accounts. They don't say you don't have to maintain books of accounts. You can maintain books of accounts, but those books of accounts need not be presented for the purpose of income tax assessment. You can very well say that no books of accounts are maintained and you can give a declaration. But GST does not allow you. In case of a limit of more than 2 crores, you need to have this GST books in the documents. So the auditor has to verify the books of accounts and then only he has to certify. If he is certifying without books of accounts, it states at peril. I have a couple of cases where which has been defending. I am finding it extremely difficult to defend because the presiding officer is asking, what is that you have certified? Your client has certified. The members have certified without telling anything. They have put a seal and signed. That's all. For CA R Sundararajan partner signed. That's all. There is nothing like check and project or as gentleman was telling, compiled from the books and records, compilation engagement. Nothing has been mentioned. Just put a seal and give. No, now UD number. I am talking about a case which is 4-year-old. There I am going and finding now UD has to be there. Now UD is compulsory. Without UD you cannot accept. So non-corporate entities also ask for the audited balance sheet beyond 25 lakhs of working capital.
So in scenario if it is a turnover is less than SCR, where is drawn as 26 lakhs rupees borrowings?
Pardon sir?
No, if your borrowings is say 26 lakhs.
25 lakhs.
Turnover 25 lakhs. The turnover is less than a crore in this case. Then it's supposed to be audited.
It has to be audited.
As per RBI.
As per the RBI Tandon Core Committee recommendation, any firm non-corporate entity having a working capital limit of more than 25 lakhs, they are supposed to take audited. That's all. They have said that it audited, like it's something like your Form 8 in respect of vehicle loan. Bank is not interested. You give a report and leave it.
Not necessarily true and fair.
It has to be true and fair. Because the audit report itself says, the Tandon Core Committee recommendation says it's a true and fair view only. We have audited the financial statements of such and such a company, the account shows a true and fair view. See what happens is leave alone the Tandon Core Committee, leave alone the tax report, etc. Our SA 720 will come into your picture. 700, 710, 720, that will come to the picture. So you cannot give a report other than SA 700. SA 700, what does it say? It is responsibility of the management to prepare the books of accounts. It is responsibility of me is to express an opinion. So please understand the audited, if at all you are certifying for your clients also, please be very, very careful. The audited financial statements has to be signed as audited financial statements only. Financial statements and audit report to be verified in detail, not by me, by the branch manager, along with Schedule 3 revised and CAR 2020. I hope all of you know about CAR 2020, which has one particular clause, wherever the company is required to provide quarterly investment, quarterly information or half-yearly information or periodical information, whether the information given in the periodical information is matching with the accounts. So once again, bankers, they are not able to follow it up. They are from the company's auditors. Leave alone the bank's auditors, we poor statutory bank auditors. They have gone to the company's auditors and said that you have to certify whether the information provided by them in the quarterly information is matching with the books and records as maintained by the company. So when you go to the branch audit, the branch manager should have verified whether this and this is matching, whether this car is clean. If the car is not clean, he should have asked that question. If the car is clean, no problem. You can ignore. Same way Schedule 3. Schedule 3 has gone under amendment. Creditors should be shown as MSME separately, non-MSME separately. The debtors it's not only 6 months and more than 6 months, less than 6 months, it has to be period wise, whether they have disclosed that accordingly, because that has a significant impact on your secured overdraft on book debts. Deep. That is period wise 6 months, more than 6 months, 1 year, 2 years. So more than 3 years, it is going to be written off at some point of time, because that debt is not going to come at all. Say book debts, one debt is going to be more than 3 years, 99.99% will not come. Reason is, it's time bound effectively. Once it's an NPA, generally we understand that NPA will not be required to be monitored or not. Very, very wrong impression. NPA also has to be monitored, because NPA is only a classification. As far as this particular branch is concerned, I have an advance. It was all along a good and performing advance. Now it has become a non-performing advance. Just because it has become a non-performing advance, should I not monitor? You have a family, and the family has 2 kids. Both kids were doing well. Suddenly one kid is not performing properly. Will you totally ignore them? You will segregate him, provide him additional tuition, provide him additional treatment, additional monitoring, etc. That's all. You cannot ignore. After all, it's your child. Same way as far as bank is concerned, another loan is part of the loan. And as far as we branch out is concerned, we are signing the total advances. That advances include this advance also. So it's also your child. So we cannot ignore that. So the NPA also has to be monitored properly, for which questions are available. Whether the timely recovery of all dues are happening in respect of non-performing advances. In case of NPAs, whether the securities are properly reviewed on a periodical manner or not. Because once it becomes an NPA, we forget about that. We also don't go and give any report. Please understand, NPA also has to be verified. So wherever NPA is happening, legal cases gets started. Suit filing happens. Whether this is a problem, I will have to see the time. I will agree with 6 or 5:45. I can stop at any point of time. I don't want even one person to go over, because the problem is we are coming here only for sharing our thoughts. If you are very busy, I can also be busy.
6 is fine.
6 is fine. Thank you. So, NPS generally suit filing happens. Once a suit file happens, the manager is also losing interest, the RO is also losing interest, head office is also losing interest. But as far as we are concerned, we are supposed to examine whether the suit filing follow-up has happening or not. In case of suit file, execution petition has to be filed, whether the EP is filed on a periodic basis or not. In case of NCLT cases, whether NCLT cases are properly filed or not. Whenever OTS, one-time settlement happens, whether the money is regularly recovered or not. No OTS is one-time payment. Let us be very, very clear. No one-time settlement is one-time payment. It's multiple time payments. One-time settlement of the amount will be paid over a period of 3 installments. Whether the 3rd installments are being paid.
Valuation also.
Valuation, that is more than 3 months or 2 years old, NPA has to be revalued. Whether it is NPA or not, more than 3 years has to be evaluated. So these are the questions which are asked in the long form audit report, which we have already explained. Whether the procedure laid for periodic review balance confirmation followed by the bench. What is periodic confirmation? In respect of turnovers also, there is no requirement for a review. But every 2 years or every 3 years, there may be a situation of obtaining AOD. Have they taken an acknowledgement of debt on a periodic manner? If they have not taken, you have to report it. Or the stock statements and book debts received regularly. Tomorrow they will be talking about this. After September, after October, up to October, if they have the stock statement, no NPA. No problem. Up to October, if they have stock statement, it is not an NPA. But November, December, January, February, March, if they are not submitted 5 months stock statement, it has to be reported in your LFR. It will not be an NPA, but it has to be reported in the LFR.
Sir, acknowledgement of debt is required for all the loans or only?
As per the sanction ticket, once again as per the controlling authority. If the controlling authority says that acknowledgement of debt has to be obtained on a periodical manner, it has to be obtained. What happens now? DPN literally has a period of, I am not coming under the banking regulation, it comes under the General Clauses Act. Pronote has a life of 3 years. Any pronote has a life of 3 years. After 3 years, it gets expired. So once there is an acknowledgement of debt obtained, this DPN's period is extended by 1 more year. So it's advisable in respect of all the loans, an AOD is obtained on a periodical basis. Wherever a CC account is there, its advantage is it's being renewed every year. So at the time of fresh documents are being taken. So there is no problem. So wherever loans are not being renewed, it's ideal to have an acknowledgement update. That is why the sanction ticket says that periodically AOD has to be updated.
Housing loans they do not take.
Housing loan 12 years time is there, madam. The mortgage document has a life of 12 years. So that way they don't take an acknowledgement update.
So, but in the case of working capital loans, for example, stock statement is not been given up to 30th September, October it is okay. But if you go to the even 1 quarter also, it will come to the SM1, SM0.
3 months stock statement is up to October. I'm talking about October. See, if you have an, I'm overstepping my area. It's going to be tomorrow only, but still I'm telling. October, we have the stock statement. It is going to determine the drawing power of your November. November stock statement is not received. So December drawing power has become 0. January 0. February 0. Then it becomes NPA in the month of March.
Exactly. For a LFR point of view, it is very important.
Very important. Very important. Not only LFR, red flagging. I will come to the picture of red flagging. There also it is important.
Practically, they will collect in the end of March, last 3-4 months statement. That is grey area.
Grey area. I will come to the picture once again. The last column I will talk about this is comment on adverse features considering significant in top 5 standard advances. Normally what happens now, sir? Standard advance we don't verify at all. Because it's a good account, what is that to verify? But now they understood. Chart ones will not answer unless there is a question. Here I am answering even without you asking a question. But still there is no problem. But the problem is unless and unless you have asked a question, you will not answer. So they have asked a question in respect of top large 5 good advances. Do you have anything to report? If you don't have anything to report also, you have to mention the advances there. That is what the long form report says. So which means you cannot escape without seeing the top 5 advances also. Even on the large advances, anyway you are supposed to verify. But generally top 5 advances you will not see that very seriously. But you have to see seriously. You can even ask me a question. Sir, whether top good advances will have any negative issue? It will be. Just for the sake of understanding, I will tell you, January, February and March stock statement, they would not have given. It's quite natural because in their busy schedule, they would not have done. They would not have given the latest audited financial statement. Renewal would have been done in the month of June. But they would not have submitted the audited financial statement. They would not have given the quarterly information statements. Anything for that matter is a negativity. Insurance. They will be having multiple units. They would not have covered the insurance by specifying all the multiple units. They would be having subcontractors transactions. So the insurance is not covered in respect of products which is lying with the subcontractors. Possibilities are very plenty. All these things you can verify from the car also. Once you see the car on the accounting policies of the particular borrower, you will be able to ascertain that. And red flags accounts. Whether the branch has identified and marked red flag wherever it is required. So where it is required to be marked red flag, where is that you don't want to ask. RBI has a standard list of accounts requiring red flagging. There was 45 items earlier, now it has been reduced to payment 34 or 35 it has come. I have mentioned a few items here. All these items are very sensitive and serious. Major borrowers comes 50 to 75% of the borrowing does not pursue recovery of overdue bills. This is what is happening in case of large advances. Overdue bills, they don't follow it up for recovery at all. So what happens? The bill is due on 31st of January 2023. The money will come on 15th of February 2023, no problem. But bills are supposed to be recovered on the due date automatically, but it doesn't happen. They also don't follow it up. So it gets keep on postponing. Only after 30 days it will become SMA 1. On next day itself it will become SMA 0. Not even next day. On the day on which it becomes due, by the end of the day it will become SMA 0. It is not even the next day like what it was earlier. Today is the due date. If it is not required by the end of the day, once again go to the circular of December 2021. Please go through that. There it as mentioned. So that day, end of the day, it will become a SMA 0. Stock statements not received in time and yet drawing power is continued or renewed. Exactly what you are telling, I am also mentioning here. If the stock statement is not received, but the DP is not changed at all, the branch manager is supposed to go and modify the DP. but he's not modifying it up. Why he is not modifying? Once the DP is modified, it has to be overdue charges has to be levied. Large borrowers will hit him on the head if he is going to charge overdue charges. 2% overdue charges, because sanction letter says whenever stock statement is not there, overdue charges has to be put at 2% in addition to the receipt. Nobody will pay. Sir, good customers will go away, sir. We can't help it. On verification of CCODs, accounts is continuously overdrawn. This is a red flaggable item. If it is continuously overdrawn. Every month, end of the month, the money will come down. Every 90 days, it will be coming down. All these things are going to happen. Checks bounce due to insufficient funds. It will normally happen. Checks bounce due to insufficient funds. It's a red flaggable item. Frequency, of course, frequently. Check deposited but not honored. Not only my checks bouncing, I keep on depositing checks of my customers. It is dishonored without being paid. That itself is red flaggable. The reason is my debtors are going to go bad at some point of time. Once my debtors are going to go bad, my stock is going to go away. My debts are not recoverable. 12 months turnover not commensurate with the sale. Say I was telling you in the initial stages, it has come in the red flaggable item. Realization of bills not within the due date. All overdue overseas limits unreleased bills bundled together and granted double CTL to avoid entry. That is a working capital term loan. A new animal has been brought in by merging all those items. That is, I am not able to pay with the due date. They combine everything when it is a standard asset itself. Everything is standard. At that time I am eligible for giving working capital term loan. I convert all these things and make it as a working capital term loan. That itself is a red flaggable item. Stock statements not submitted in time. Item-wise details not given. Lump sum figures are given without quantitative details. In stock statement, without giving the list, they are giving a stock, raw material 1 crore, WAP 1.5 crores, finished goods 1.5 crores, totally 3.5 crores, without giving a breakup. Unpaid stock not deducted. Stock state includes items financed by banks and PCR, LCR others. That stock should not be included in this stock statement. Huge difference in annual and monthly stock statements. Monthly statements are being given. At the end of the year, huge stock is substantially reduced at the end of the year. Because the stock is huge in the end of the year, profitability will go up, I will have to pay tax. So there I reduce the stock. Month on month stock will be 2 crores. At the end of the year, it is only 1 crore. Why? This is the question. Once again, CAR 2020, compare that and examine. Unusually high value of stocks not commensurate with the purchase statement. There is a purchase statement also being given on a month basis. Last year's stock is 1 crore. This month's stock statement is 2 crores. During the year purchase only 50 lakhs. How can that be? He has to compare. If it is not comparing, branch not obtained stock audit report. Wherever stock audit is required, they have not obtained a stock audit report. That's a red flaggable item. Book dates aging not shown beyond 6 months. Search report from the register not obtained. Branch not obtained NOC from the builder. Wherever the builders are there, building loans are given, it is not. Apart from that, there are also a couple of items including a search happening in a particular borrower's account. It's a red flag item. Search by either enforcement director authorities, income tax, GST is red flag order. Nothing has been found out subsequently, the red flag can be lifted subsequently. But at that time, red flagging has to happen. So next is regarding renewal and enhancement. Once again, as I told you in the initial stages, this will happen in the same manner as credit appraisal, documentation, etc. But every year renewal has to happen to ensure that it does not become NPA. Once this verification happens, it has to be classified as a regular standard assets, SMA 0, 1 or 2. But here one catch for us. Classification, whether the branch has done the classification through the computer system without manual intervention. This is a question which has been asked now. Previously it was not the case. The question was whether the branch has classified accounts in a proper manner by standard and non-standard. That's all. Now what they have said is whether the branch has classified the accounts as performing and non-performing, SMA 0, 1, 2 through computerization without manual intervention. So once again you are under compulsion to examine whether manual intervention happens or not, because last 2 years all the banks have computerized NPA classification. NPA classification is no more through the manual intervention, not by a separate software also, it is part of the CBS. One possibility is you have a report in the audit exception reports, manual correction in respect of data, because an item can be manipulated as SMA 0, 1 or 2 or performing asset only by changing one particular date. Can be the last repayment date. Once the last repayment date is changed, everything will undergo a change. Or if the EMI figure is changed, it will undergo a change. What happens is, one advantage of the CBS environment is, once a data is entered, it is fixed data. So if you go to the audit exception reports, where you can say manual alteration in the core environment system, it will give you a report. In that report, exception report will happen that in respect of these advances, the date of last disbursement has been changed, the date of first disbursement has been changed. It will be giving you the information. From that you can examine whether any manual intervention is there. If it is there, please report it. Let them go to help. I am not concerned. Please report it. Downgraded and upgraded. Advances outstanding for more than 10 crores, we have to give the list. Whether it is downgraded or upgraded, along with the reasons. Any item can be upgraded, there is no problem. Tomorrow once again, session will be there, how the account can be upgraded. Once it is upgraded, we are supposed to give the information, how it is upgraded with the reasons there are. Wherever restructured and rephased accounts is there, what you will be restructuring and rephasing. Very, very important. Any changes in the sanction terms is a refacement only. Whether it is change of interest, whether it is change of EMI, whether it is change of repayment period, whether change in the holiday period. Any of these items are different from the sanction letter, it becomes a refacement only. There is nothing like any other refacement. Any of these refacement happens, account has to become substandard. The standard account has to become substandard only. Once again, the report is there, and as per the restructured account, you can verify. Wherever upgradation happens, whether it is according to the norms we are supposed to reply. Wherever disagreement is there, you have to report, and also classification and MOC, IBC. Very, very important clause which has been freshly introduced. In respect of IBC process, if the branch is the creditor who has gone for an IBC process, fine. Have they filed in time? That's the end of the question. Wherever one of the creditors of the borrower has gone for an IBC process, whether we have presented our claim in the NCLT, that we are supposed to verify. How do you determine that? How do you examine that? You may not be having the input at all. For this purpose only, we are supposed to verify the list of all large advances, go through the files. Because branch will definitely have correspondences between the parties wherever the NCLT process happens. Because once it is going to an NCLT, NCLT would have sent a letter to the particular branch asking for the details of the outstanding in respect of that particular account. If you ask for the file, in the file it will be mentioned. No manager is so clever to have a separate file for the borrower. That is for sure. He will be keeping in the same file only. You ask for the file, you open it, you will be able to ascertain that. In respect of suit filed accounts, previously that question was not there. Now it is asked, specifically asserted to say whether the branch is prompt in ensuring that the decree execution. Because previously there was like, in case of suit filed accounts, if there is any observation is there, you have to report. Now they are asking whether any decree execution correctly is being done or not, what is the age-wise analysis that they are asking. In respect of concluded cases, whether the money which is received is appropriated properly, that's also being questioned. Last but not the least is documents kept under centralized processing zone. Now it has become a new animal. In most of the banks, documents are kept at the CPC. So in those cases, you have been categorically saying that documents are kept at CPC, so we have not verified the document. That option is no more available because there is a question which has been added saying that in respect of documents kept at the CPC, have you got the documents sought by you from the branch? If not, report. So it is your responsibility to list out the 10 or 12 accounts asking him to give the documents. He will have to arrange for the receipt to the respective RICPC. You will have to go and verify the documents and give the report. If they don't give it, you can give the report. But that will not happen because they will definitely arrange for the report for you to verify. This is what I have explained already, so I am not going to. These are the examples about this evergreening. What happens is loan granted by the same branch of the bank or a different bank to the creditor of the CC account before slipping into the NPA. Amount is once again transferred from the CC account to the loan account and the loan account is closed. So what happens? The CC account, it is already, a loan account is already NPA. Money comes to the CC account from some other loan and the CC account it goes to the loan, it gets closed.
Right.
For this purpose, get a gist of loans which has been given in the fag end of the year. Ask for the loan sanction in the month of February and March because they don't do it from the day year end starting itself. End of the year only they do it. Examine whether that matches, whether any loans are there is being round tripping happenings in respect of these items. 6 agricultural loans given to various individuals, and all these monies are brought into one particular society's account. Loans are given independently, agricultural loans only. This is a classic case which has happened in a particular place. It was given to 6 people, 3 lakhs, 4 lakhs. All these people came to the society. Society became performing asset. This becomes a new fresh agricultural loans. Agricultural loans obviously have crop loan facility, crop seasons, etc. They get the time available for them. This is another example. ABC current account cash payment will happen from that. There will be CC cash account cash deposit. If you see the interest amount and recovery, wherever cash transactions are there, you can examine that these cash transactions are only bogus entries. Only small entries which is not going to really matter if it is not profitable. So wherever cash transactions are happening in the last 2 months, please pick up those items. Verify a couple of items. If that doesn't click as that item, you are acceptable to that, you can leave it like that. So once an account is becoming an NPA, you are supposed to verify it and then only give the loan. Without verifying, they give additional ad hoc loan. That's also dangerous. There are checklists which are available. This website you can download. It's available in that. I will be uploading those checklists in those website. You can download it subsequently. So wherever claims are happening, inter-subventions, etc., we are also supposed to give a certificate whether the claims due to the bank in relation to the advances has been properly lodged or not. We are supposed to verify. These are the illustrative items, inter-subvention, CC, PMR loans, etc. We are also giving certain certificates, so I am not going to touch upon that. Non-funded advances. LC and BG has become a serious issue, particularly after PNB frauds. What are the items just verified? These are the items just verified in respect of non-fund based advances. You have to see once again the correspondence files. What are the guarantees which are being given, LCs which has been given. Wherever the LCs and guarantees are matured, it has to be cancelled. How? When do you cancel? It is not required to wait for the original guarantee to be bringing back. That is not the issue. Once the guarantee period is over, after that there will be a grace period for claiming the guarantee. After the 3 months, normally 3 months will be the grace period. The 3 months period is over, the guarantee can be cancelled from your records. Why it has to be cancelled? 2 reasons. One is this guarantee will be unnecessarily pulling the organizations and the particular borrower is eligibility for further loans, number 1. Second issue, this will be pulling down the capital adequacy norms of the entire bank as a whole. What will be the expired guarantees which is continuing in the balance sheet, it will pull down the capital adequacy rating. So it's a positive MOC, you can definitely do that MOC for cancellation of the items. Whether margin requirement is happening properly or not. 10% or 25% as the case may be, the margin has to be bought in and then only this LC or BG has to be given. Without that, that should not be given. Disclosure in the financial statements, whether in the borrower's account, the LCs and BGs have been disclosed or not. Because without disclosing this conditionality in their books and records, it will not be claimable at a later date at all. So we have to ask for the audited financial statements of the borrower, where they should say that so much of LCs have been opened by the bank on their behalf, or bank guarantees have been given by the bank in their financial statements. In case of a non-fund, this is a new item which has been added in the long form audit report. In case of non-fund based advances, wherever there was a default, whether they have converted into a CC account or they have merged both the accounts. That is, limit would have been given as 1 crore as working capital loan and 9 crores as non-fund based limit. Because there was some slippages, etc., they apply for it. See, instead of 1 crore and 9 crore as working capital, 1 crore working capital, 9 crore as non-fund based, why don't you make it as 2 crores as working capital and 8 crores as non-fund based? If it happens, they are asking to report. Of course, if with the proper sanction only, if the sanction has happened like that, RBI is asking us to report because it's an early warning signal. Early warning signal of a long term, it's interchangeability between fund based and non-fund based advances. So once again, as far as advances is concerned, these are the special take home. Last year accounts also you can verify. It is not compulsory that you have to verify the current year accounts only, because for ascertaining the quick mortality accounts about last year transactions has to be verified. So what are all the accounts which is available as on 31st of March 2023, you are eligible for verification because you are signing the balance sheet which consists of the advances. But last year accounts definitely you have to verify because quick mortality is not happening. Head office and RBI inspection reports, we are bound to go through that because that is going to give you information plentifully on the basis. In fact, you have to give the list of items. verification of operations is very, very important. In the business account, CC account or current account as the case may be, their bank account operations has to be verified. You have to take a screenshots also in case of large advances. Because that will give you up to number of information whether that CC account is properly operated or not. I will take only 10 minutes for the other advances. Other than advances, these are the items which are going to be there. So as far as cash with branch is concerned, there are few amendments which is happening. Normally earlier only two questions were asked, whether the cash balance is in excess of the balance limit, that's all. Now they are asking additional items by way of ATM, whether the closing balance is tallying with the accounts. Earlier this question was not there. In ATM also we are supposed to go and verify the bank balances. On 3rd of March, April you are going for the audit, you can verify that and you can do the back working of the figures as on 31st of March and you have to verify that whether it is being tallied or not. Insurance cover, wherever the branch is maintaining, normally it is not happening, you can very well say that insurance is held at HO. Only thing is you have to ask for the MRL for that matter. As far as RBI and banks are concerned, 90% small branches will not be there. Other banks, definitely there will be account which will be updated. Confirmation of balance has to be obtained. Long outstanding items should be verified. If that requires an entry, we have to pass the entry. Please ensure that these are being important part of it. Money at call and short notice and investments you don't have to bother because investments invariably do not be in the branch. But there are only two possibilities. Branches are deputed to collect the data in respect of the local deposit. For example, Indian Bank might have deposited in Karnataka State Financial Corporation. They would have given the information to the Bangalore branch of my Indian Bank to collect the data in respect of those accounts which is being made, whether the dividend is being taken or interest collected, all this information, if they can get the information. Wherever matured items are there, they can ask them to do the collection. In that situation, the branch will be receiving the document from the head of the other office, record it, send it for verification, fetch it back and send it back. That has to be recorded in the books, whether that is happening. This will be found out only in respect of files verification and nothing else. It will not be forming part of the account because there will not be any entry in the books of investments as far as the branch is concerned. Please ensure that it has to be very good. Suspenses and sundries. There are two items, one new clause and one amendment, if we talk about that only. Because all of us know about the suspense, it's equal to your advances recoverable in cash or in kind in case of a corporate. So suspense sundries. We are supposed to verify unusual items and all, already it is there, I am not going to bother. But outstanding items, earlier we were mentioning for 1 year, more than 1 year, 1 to 3 years, more than 3 years. This was the report which was being given. Now what we are saying is, any items outstanding more than 90 days, we have to report. With reasons why it is pending. So please understand, you have to give along with more than 90 days, we have to give the report. This is one new addition. One classic example in respect of advance items is advance for fixed assets. What will happen is, invariably the branches will give advance for fixed assets. Assets would not have been capitalized. If it would have come into the branch, it would not have been capitalized because controlling office has not given the approval. But machinery is already installed, being utilized. In January, machines would have been, the general manager would have come and inaugurated the computer center also, but it would not have been capitalized in the books. So in those cases, if advance for fixed assets is pending for a long time, you can ask for the information, you can very well pass the entry in the books. Not in the books, in the MOC, you can pass the entry. Disadvantage is, if you don't pass the entry, fixed assets also will be understated, advances will be overstated, depreciation will be understated. To the extent profit and loss account also will be affected. Please ensure that it is being done. One more important question which has been inserted now is there any item of intangible nature in the sundry assets? Any intangible nature is there, whether it requires provision or write-off. This is a new item which is happening. What is intangible item is $1 million question. How will it come into the sundries? That is also $1 million question. Probably this is in respect of brands, etc. I don't know why it has happened, but they have brought in this question. You have to necessarily report. Wherever sundries have intangible items, we are supposed to keep a report. So as far as liabilities are concerned, there are only 4 important items. Inoperative accounts is a purely fraud-prone item. You can go through these inoperative accounts and force yourself into the inoperative accounts. You can do an example of forcing into inoperative accounts to operate account. If it doesn't allow you, no problem. If it allows you, you can take a screenshot and give it as a report. Definitely, please understand, this is an important examination which you can do. In operative accounts, you can sit up behind the officer, ask the officer to make an operation in an operative account. At least 3 or 4 accounts you examine. If it allows him to operate until the disbursement without the approval of the manager, then you can definitely report. This is a fraud prone area. This is an area which is very, very dangerous. Internal control area is to examine. FCNRB deposit, wherever foreign currency deposits are there, normally what happens is last 4 years, all the deposits are automatically renewed. So for that purpose they are brought in the case of FCNRB deposits, if automatic renewal happens without ascertaining the residential status of the borrower, we are supposed to report. So in respect of this year under audit, you have to examine whether FCNR deposits have been renewed. If it has been renewed, have they taken the continuation of residency certificate or not? Otherwise, this account is not eligible for automatic renewal. Minimum balance requirement, whether the SB account has a minimum balance stipulation, if the minimum balance is not maintained, whether any levying charges has been done or not. Previously this was not a question, now it has happened. So we have to examine, there is a report which is being generated wherever minimum balance is, that is SB accounts slipping beyond minimum balances, that report can be taken and you can ask for charges which has been levied or not. As far as other liabilities, sundry deposits, bills payable, etc., old outstanding items pending for more than 1 year has to be reported. Previously it was considering 3 breakups, 3 buckets, now it is not there. More than 1 year we have to report and we can leave it like that. And as far as contingent liability is concerned, it is not CC, LC and BG, it is other than that. Once again, your RBI can be helpful in this matter to find out that. Other than that, you will have to ask for the files and also take an MRL, but MRL will not be sufficient. I am not going to repeat. This is an important item. Gold, bullion, jewelry, books and records, enterprise transactions. Very, very important. These are the 6 items in the general. I will go through important classes only because time is running out. Whether gold and bullion is made under joint custody. It is not your jewel house. Don't presume it is a jewel loan. There are certain branches which are authorized to trade in bullion. Whenever they are authorized to trade in bullion, whether this receipts, issues, balancing, gold and bullion is properly maintained or not. If it is not maintained, you have to report it. This is a new clause which has been introduced because of the bullion trading allowed on account of banking requirements. And as far as security control systems are there, we are supposed to verify because DDs are in an area where it can be becoming fraud. All these things are only for ascertaining the fraud. Books almost new because it is a CBS environment. They made it said very clearly. The question is whether any accounts is there without getting integrated with CBS. This is a post PNB fraud because they have made it very, very clear no transaction can happen other than through CBS. So they have brought in a question and they are asking the auditors to question. Is there any auditor to answer? Is there any transaction which has gone through the account without going through the CBS or not? Pardon? Swift. All these transactions. You have to examine whether anything has not gone through without going through the system. How it can happen? Once again, exception reports are available. Please ask for the exception report. They are asking whether the exception reports have been generated and compliance is there according to the government authorities guidelines. The exception report has to be taken on a daily basis, and wherever exception reports are there, it has to be complied with on the next day itself. Most of the exception report. Credits in the expenditure account, debits in the income account, all these things are coming by way of exception report. Please go through that, and corrections made manually in respect of the documentation, as I told you, in respect of NPA is also very, very important. Data integrity, manual intervention. Whether any manual intervention has happened and whether audit trail has been enabled or not. So, whenever manual intervention is not prohibited, it can be allowed, but provided with a specific methodology whether manual intervention has been done. So, whenever manual intervention has happened, whether it has been properly authorized, recorded, and done with the audit trail mechanism or not. That's what they are examining. We are supposed to report. So during the year in manual interventions, you can examine that. On the basis, you can give a report. Data integrity to be checked and commented upon. It's an MIS to the CO. They are asking whether the data integrity is properly maintained or not. What is data integrity? $1 million question. We will not be able to ascertain in a detailed manner. But what extent you can examine, please, including data entry. Whether the data entry, this is what I told you in the initial stages regarding chief manager allowing somebody else to do the data entry on his behalf. Interbank accounts, it is no more available because the CBS, but only thing is that said, correspondence happens, all the correspondence has to be responded within 7 days, not more than 7 days. No items can be outstanding for more than 7 days. If it is outstanding, you are supposed to give a report. Frauds, very important area. Previously what was happening is frauds, if it is detected and reported, whether we are supposed to say what is the status, that's all. With that our job was ended. Now what is happening is, on an overall observation basis, have you verified and have you identified any potential risk area? This is what I said. They have made us become horoscope, these soothsayers. They have made us as soothsayers. On our overall observation, whether we are able to identify a potential risk area. Possible. It is not that it is not possible, but we have to have an eye for it. Like what? They have also given examples in the question mark. Please go to the question. It is disturbing. Falsification of accounts are represented by the borrower. If the borrower has given falsified entries, let it be stock statement correction, let it be books of accounts correction, let it be any items which is given with a manual correction, other banks confirmation balance, other parties confirmation balance, stock statements, stock audit reports, any reports which is given by the branch borrower, if it is manually altered or modified, it has a significant effect on the fraudulent intention of the borrower at a later date. Misappropriation of funds or diversion of funds through shell companies. This is what I said. End use has to be examined by us in a CC account also. Whether huge amounts are being removed just like that. This I have explained at that point of time also. Why it is being brought down now once again is they are asking us to report whether any shell companies are operated, and from that, how do you know it's a shell company? We cannot. But in the borrower's account, you can examine whether there is a money which is being routed regularly or not. Other than normal, for example, if you are a businessman, you will be having a standard method of receipts and payments. If there are some unusual transactions, you can pick up a couple of examples and examine whether any unusual transactions are there or not. Forgery and fabrication of various documents. How do you say it? Even the forensic auditor cannot examine whether forgery has happened. Only after the forgery has happened, he can pick up the example and examine, yes, there is a forgery which has happened. At the time of initial stages when you give, you will not be able to identify the forgery at all. But they are asking this question. But only thing is, they are saying that on an overall observation basis. Problem. What is overall observation? You can exact couple of examples, you can pick up an example. We have verified that, this, etc. On that basis, we could find out that it's not there. Vendors, related parties, units are not in their addresses. This is what I was telling you at the time of inspection. That is, the vendors of the borrower. For example, I am going to fund an Indian bank account in which TVS is the unit for which loan has been given. TVS's vendors, TVS's related parties, whether they are in their addresses or not, I have to report. How do I report?
Address mapping.
Yes.
Pan mapping, address mapping.
That is why the ROCs, NCAs, they are coming and asking for the registered office to be taken with a photograph of the director. They are trying all these things. That's why all the shell companies issues happen. And in fact, yesterday I was having a disturbing news in Chennai. One auditor has been investigated by MC authority for opening up 1,500 companies. Our own people are only the problem for all these things. But unfortunately, we are not able to see certain things. We keep ourselves shut for our organizations. Effectiveness of early warning framework for RFS classification. Whether the branch has robust information availability for effectiveness of early warning framework for red flagging accounts classification. This is a question. Once again, what is this effectiveness of early warning framework? Once again, various questions. That is whether stock statements are regularly obtained, whether debit balance is there, overdrawings, whether frequent overdrawings are there. The branch should have a system on which they will have to identify the red flag indicators. Next is KYC and AML. You have to do a test check and do it. MIS, once again, there is not much of an issue. There is a small modification which has happened in respect of the miscellaneous audit report. There they are saying you have to list out the audit reports done by the branch. Revenue audit report done. Previously what happens? In respect of these reports, any adverse files should just be given. Now it is not the case. You have to list out what all the audits which has been done in the branch. Inspection report, RBI report, along with the date. After that, you have to say whether any items are still pending or have you considered all those items are there. Only advantage is, only if we are going to list out, we will also ask for them. Then only they will also give. Once again, MRL has been done. These are the only audits that has happened during this year on the basic medical. Certificates, once again, $1 million question whether we will be able to do all the certificates, particularly in respect of capital adequacy, etc. We will not be able to do it at all because it is being generated from the system. But just because it is generated from the system, it does not have the God's hand. You know, all of us know in the match winning, Argentina match winning, Maradona said that it was head of Maradona and hand of God. He hit a final goal. He gave an interview saying that the goal was hit by head of Maradona and hand of God. Actually, he only put like this. That was the reality. He said head of Maradona and hand of God. Like that, the certificates are being brought in from the system. Just because it has come from the system, it does not have the holy map. What you can verify is capital adequacy. The last 8 to 9 years of my audit. The last 2 years I have not done the audit because my team has gone. Before that, whenever I am doing, I have done this capital adequacy, not certified without disclaimer. I have given a disclaimer only, stating that the capital adequacy norms, the total of various advances are matching with the financial statements, but the breakup is not able to be matching in the absence of detailed working paper at the branch. I have given a certificate only and it has been accepted also. Same way maturity pattern of advances in deposit. There also you will not be able to keep it. If they give the information, fine, you can verify it and report. Otherwise you cannot give it at all. Same way in case of, but prudential norms. Saul was talking about materiality. Please understand, materiality is not applicable in respect of prudential norms. Materiality, what is given by the head office, that more than 10,000 rupees, less than 10,000 rupees don't give an MOC, is not applicable in respect of prudential norms. Even 1 rupee of classification between performing and non-performing, you are bound to give it. You don't have materiality as far as prudential norms are concerned. And in the same way, in case of prudential norms cases, events occurring after the bench also will not come. So if there are some recoveries after 31st of March, but on 31st of March it's an NPA, please classify it as NPA. RBI is viewing it very, very seriously and he is giving notices to the members for having certificate on the basis of events occurring after the balance sheet, because you are doing audit under Banking Regulation Act, not according to the Indian Institute of Chartered of India. There was a specific letter by them. An interest subvention, very, very important. Almost all the rural advances and education loan advances, interest subvention income. There is a working available. There is a detailed working which is available inside the system. Ask for the working. Couple of examples you can verify it. It will not be a mistake. You can be rest assured. But only thing is, at least a couple of items you do verify it and then do the certification. Without doing that, don't do it. Just because they have taken a printout from the system, don't certify it. Take them, but calculation is available. Only thing is, they will say that calculation is not available. But take the higher ups, ROs, regional office systems. If not, CSA. Go to the CSA. They will be able to give the information because they are not going to verify at all. CSAs are only going to consolidate the inter-subvention certificate given by the various branch auditors. They are not going to verify. So what happens is, in case, and in fact, when this debt write-off happened, 67,000 crores return off happened, central office auditors were asked to explain the Reserve Bank capital because there was lots of errors in that. They said, we can be answerable only in respect of the branches which you have done. Other branches is only a consolidation which has been done by from the various auditors. They were not able to proceed because when a person is killed, one person is there as a killer, he can be arrested. When it is a mob killing, nobody will be arrested. Like that, has escaped. Same thing will happen in case of interest subvention also. Please understand, you are supposed to verify only after ascertaining what is the information. Certificate on compliance of Gilani and Ghosh recommendation. There are certain questions where you cannot say yes or no. So please read the question and answer it properly. That's all, nothing else. You cannot just like that say yes or no. Please examine and give the question answer properly. As a sum up, you require a standard foundation on auditing techniques because techniques, context is same, response is same. Only thing is methodology has changed. Please change your audit techniques. Expert knowledge of banking is required because without banking knowledge, if you do the audit, you will not be able to sustain that. Please ensure that it is being done. Overall idea of IS working, information technology, how is it working? You have to examine. Without knowing that, you will not be able to answer at all. Traditional values, all of us we have traditional values. Only thing is, in the bank, what happens, and because of the pressure of timing, we just tend to don't go by that at all. To document your work, take screen printouts. Wherever it is required, take screen printouts. Because system is available. MR alone is not sufficient, please understand. And as far as information technology is concerned, take only read-only access. Don't ask, they will give an access of their own password. Don't do it. Because once some wrong thing happens, they will put the blame on us. Take only read-only access. If you are not given by the branch, go to the regional office and ask for it. Otherwise, you ask for the CSA to provide for that, they will definitely provide for that. This is the conclusion. Keep it with proper documentation. Ensure that the full statistics is given wherever you are commenting. Wherever you are commenting, please ensure that give detailed information. Wherever corrections are required, give an MOC. Wherever corrections are not required, give it in LFAR. Wherever you are not able to give a report, please give a disclaimer. Nobody is going to stop your talk. Please give a disclaimer like capital adequacy ratio, etc. Give a disclaimer. There are two circulars. One is Reserve Bank of India circular dated April 1, 2022, which is master circular for NPA norms, which will be explained to you tomorrow. And one more circular of December 2015 of Reserve Bank of India in respect of guidelines for NPA norms and what is available as guidance note by the Institute of Economics data released 1 week back. These are the Bibles for us for the next 1 month. After that, we can forget all these things and wait for the next year. Thank you very much. Any questions? I am available. I have given the mail ID. You can respond. Question in the email ID. I will be able to respond to it in one day's time.
In case of appraisal, we have mentioned MPBF method.
Maximum permissible banking finance.
Nowadays, all
No. I am not talking about that. The system of classifying as maximum permissible finance is over. But what happens is, what is maximum permissible banking finance? For this fellow, the turnover is 1 crore. MPBF is 4 crores. I am not telling on that concept of MPBF. I am talking about maximum permissible banking finance.
Thank you, sir. Before vote of thanks, sir, we have a couple of announcements. We have breakfast meeting at this Vasantanagar premises on Saturday, the 8th April 2023, from 7:30 a.m. to 10:30 a.m. For 2 hours CPE. And also we have bank branch audit seminar for students on 30th March at the same premises again. I request all of your article students and office staff to be getting registered for the same. That was a fantastic celebration, sir, on LFAR and certification. Let's all give a round of applause for this. Sir, that comes only because of experience and the passion towards the subject. When coupled with experience and a light stint of humor, that has made the interactive session complete. Thank you so much, sir. Thank you so much. On behalf of members present here and Managing Committee of Bangalore branch of SISF ICI, we thank you for taking your time and enriching the knowledge of the participants. As a token of respect and gratitude, we would like to hand over a memento to the speaker. Can I request CA R Sundararajan sir to do the honors?
You don't want the chairperson with you? On the table?
No, I want the members to.
No, I said along with
Thank you so much, sir. Very nice, sir. Thank you so much, everyone. And this ends up the first day of 3 days workshop on bank branch audit. Couple more to go, and then you can start your bank branch audit from first week of April. Thank you. This is Manjuna CA Manjuna Temhallu, Secretary for Bangalore branch, signing off today. Thank you.